market's whack. Just got to make the best of it right now. Do the best you can. Try to get in and out. Just nothing to say. It's whack. Try to take anything that makes sense and manage the risk is the only thing you can do. Dollars all over the place. Pounds all over the place. Right now the euro is gaining. Kiwi and the Aussie are losing. Just trying to play that route right now and see if it'll give something. Get some pips out of it. Messy. No, just historically it can be messy on these kind of days. You got FOMC at 2 p.m. today in New York. It's a long ways away. A long many hours from now. 7 hours, something like that. Crazy. A lot of uncertainty and stuff going back and forth. Hopefully this pound will hold. And pound and the euro both strong at the same time. Pound, the euro, and the dollar are all going up at the same time. I mean, what do you do? It cuts out a lot of opportunity, cuts out a lot of options. Stuff going both ways. Depends on what it's against. Depends on what you're trading it against. And it's difficult to figure it out. It's not really difficult to figure out. The problem is it's not staying in a direction. It's going both ways. It'll start going one way and then come back the other way. Oh, okay. Dump on the S&P. That about. Might try to position on that. Maybe that's finally gonna die. Maybe that finally dies today. Try to take that short and see. Let's take the stop. Not even gonna worry about it. Let's give it a small position, give it enough room. If it comes back in the range, it's wrong. Just in case it drops. Just in case. Just gonna take a small piece on it. Maybe half a contract. Half a contract's pretty mild on the S&P. On the NASDAQ though, that can be a lot of risk. NASDAQ's a little more volatile. Man, see, if this hadn't have just broken that low, I'd take it. Man, I wish I would have caught that earlier. Crap. If I'd have seen that big bearish candle. S&P's still got room. Looks like crap. Should have shorted that yesterday. I was short yesterday, but I didn't hold it. That looks pretty bad on the S&P right there. It's breaking low. It was in a consolidation. It's kind of breaking through it. Not really a lot. You got a historical high here. No, just kind of betting against it. It's not an amazing entry. It's not an amazing entry, but just in case it runs, I mean, it might be worth. I'm taking a small piece on it. It's not an amazing entry at all. It's already moved quite a bit, but just in case it drops, at least gotta have something in it. And if not, I'll take the stop, offset it with something else. It's just not amazing. Oil's already left. Oh wow, gold died. Okay. More garbage. More chop on gold. Just in this range. It's just back and forth, up and down, up and down, up and down, up and down. There's no trending move anywhere. Hopefully there will be. You know, that's nothing you can do about it, but wait for the there's an accumulation happening here on both sides, and eventually that'll release, probably both ways. Once this thing starts moving and widening out a little bit, it'll be something to trade. Right now it's in a consolidation. It's been 3 days. This is the 3rd day of sideways with no move. Like, there hasn't been really a real push. 1 of these times, it's gonna let it go. We're just back to the bottom right now on that. It's probably best to leave it alone. Everything's choppy. Do the best we can here. Dollar CAD ended up being good. Actually moving a little bit, looking good. Dow is on that. Maybe this S&P will die. I don't know. Got a choppy garbage market. Oh, hold on a second. Sorry, I just realized the music was up. Sorry, guys. 1 second. Yeah, so we got a choppy garbage market. Gonna do the best we can today, and just we know we have FOMC today. That's gonna be an issue. Freaking Euro Kiwi. God. It's just back. Like, there's no move. There's no continuation anywhere. Alright. So now the euro's coming back. Bro. The whipsaw is real. It's just, man. Just look at the charts. Like, just look at it. It's just, would you look at that? Just sideways. Everything is just chop. It's like extended periods of sideways, followed by 1 or 2 dumps, 1 or 2 candle move, and then an extended period of sideways. Just pretty much what's going on here. Very, very little volatility. I don't know what is going on lately. There's almost no volatility in the market. I think a lot of it probably has to do with just these things being at these extreme levels. Yeah, stock market's on new all-time high every day. I mean, you start to lose volatility at the top. You got these crazy levels, all these multi-year lows and multi-year highs, and nobody knows what to do. It's just like too high to buy it, but it's not a sell yet. You know, that kind of thing. You got higher time frame ranges going on, higher time frame indecision. That S&P actually looks okay short. I'm gonna stay on that. But yeah, it's just got a bunch of crap. Like, look at the dollar, like 4-hour chart of the dollar. This is insane price action. Or the lack of price action. Nothing. Look at the size of these candles. Look at this doji, 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 over and over and over and over and over again. And then, you know, look at the size of these candles, and then look at, you know, when things are trending and moving, these much larger candles, much bigger candles when it's moving. And right now you just got nothing. Just a little indecision on both sides. Nothing. Just a little nothing sideways. It's hard to trade that. You know, when you got something so influential like that as the dollar basically pushes the whole market around, doing that, then, you know, crap, it's garbage. The whole market does it. Everyone else, you just doji, 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 doji. Extended periods of flat chop. Don't understand what's going on here. Like, I mean, I know what's going on. I do understand it. I wish I didn't understand. I wish it wasn't doing it. We've got higher time frame ranges. It's happening on higher time frames is what it is. You know, like, you look at the dollar, euro pound here on the daily. It's doji, 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 doji on the daily. Just every day is just an indecision, nothing. It's just flat. There's no volatility. There's no trending move. Garbage, just coming back and forth and back and forth and back and forth. It's like nothing. This market to start moving again. Oh, something was going on. There's things in the news yesterday. It was interesting. I didn't know what was going on. I haven't been watching the news lately. They're saying there's hundreds of thousands of people at the border trying to get into the United States. And there's like some crisis at the border right now. I saw there's hundreds of thousands of people trying to get in. Because apparently Biden said that we were welcoming immigrants and stuff like that, and now everybody's coming. There's a mass migration trying to get into the United States right now. It was on the news last night. I was like, what is going on with that? Apparently there's some kind of crazy crisis going on at the Mexican border. And people are coming from everywhere. And everybody's trying to get in. That's weird. Everybody wants their stimulus checks. There's nothing. Biden tells migrants to not come to U.S. amid border surge. Interesting. Yeah, I don't know. This was all over the news yesterday. Apparently, there's some crazy thing going on. Just people as far as you can see. Just people lined up. They're all coming in all at the same time. Nuts. Going on with that? People should be allowed to come in, but I don't know. Should probably follow the rules. I think it's not really fair to people who did follow the rules. I understand it. That's a tough issue, actually. Immigration is a very tough issue to solve. It's tough morally and procedurally, because you want people to be able to come in to have a better life. That's what people are coming here, because they want a better life. You know, I totally understand that. But then it's not fair to someone who followed the rules, did all the paperwork, waited 7, 8, 10 years sometimes to come in, following the proper paperwork and all the proper procedures, have to wait and take all these tests and meet all these requirements, and then somebody just walks across the border. It's not, you know, I understand it. It's not fair to the people who are doing the right thing. I get it. But at the same time, yeah, how do you tell people no? It's just a weird situation. Tough one. I don't know if there is an answer for that. Yeah, the market's slow right now. Yeah, I saw there's some crazy thing going on. It was like the biggest news story. Like happening like right now, like over the last 24 hours, there's just like thousands and thousands and thousands of people arriving at the border. And it's like saying they're trying to keep it out of the news and all this stuff because they don't want it to look bad. Crazy situation. Come on, market. Let's do something here, guys. Euro Aussie's still holding. Euro Aussie's looking good. Euro Kiwi's looking good. A lot of indecision on it, but we might be having an update here. Come on, Euro Aussie. Come on, Euro Kiwi. Go, bruh. Looking better, much better here. I mean, it's bullish. It's bullish, and it's showing a direction, and it's bullish. I mean, nothing really to do but position for it and hope it goes. If it comes back below this consolidation, then you don't want to be in it anymore. Oops. I mean, it's pretty simple. If it's consolidating above a previous consolidation, and if it comes back below that, you don't want to be in it anymore. It's changed directions. Well, let's go. Oops. Hopefully it's going to go. Euro, again, the Euro's changed directions. It's just, it was weak and now it's strong. Euro Kiwi's probably the same situation. The Kiwi and the Aussie are going the same direction. Euro Kiwi's same thing. S&P shorts eaten. Let's go. Get it. Hashtag dump it. Pull back. It's just so close to where probably going to be a reaction here in a minute. A previous level here from Monday, I guess. Monday's average. Contract settlement average after the daily close. Let's go. Now let's watch it for a minute. Hold on, give me just a minute. Be right back. Looks like pound Aussie and pound Kiwi are also running. It's the Aussie and Kiwi dumping. We got that. Okay, so this is actually hitting level here. It's probably going to be a range. I ain't it right there. It's not a good idea to buy that. However, looks like it may continue. See if it's going to go up, make a higher high, pull back, make a higher low. Hopefully we're going to be in a trending move here. Pound Aussie, pound Kiwi still in it. Euro Kiwi, Euro Aussie both looking good. I don't know, man. Euro Swiss, it's a weird one. CAD's changed directions, the dollar's pumping. And like, it's whack, man. It's all over the place. Oh, food's beeping. Looks like the dollar's gonna gain here. Problem is the euro's gaining, so it's not a good short. Euro dollar is just probably not a good idea to sell it. Something like Aussie dollar, Kiwi dollar maybe. Probably already moved. Aussie dollar short, Kiwi dollar short. Looking for a continuation. Very likely. Not a bad idea. Take Aussie dollar and Kiwi dollar. I'm going to position on that right now. I'm going to take Kiwi dollar and Aussie dollar short. Not even worry about the entry as much as what's likely to happen later. Add it to the net position. Eventually it'll go. Just going to guess. Got a super weak Kiwi and a very strong dollar at the moment. Guessing that it's going to dump and go after that low. No confirmation yet. Hold on a minute. Give me just a few minutes. right, looking good here. S&P shorts running. Probably a good idea to take some profit here, or secure the bag. Gonna get some reaction right here. Get a previous equilibrium right here. There's gonna be a reaction. Hopefully this will continue lower. When you open a lot of trades, have a maximum? Yes, that's actually a good question. That's a fair question, Chris, in the chat. Do I have a max loss? Like, you know, because I do take a lot of, especially with positioning like that. You know, when I'm in a net position and there's a bunch of trades on, do I have a max? Yes. Yeah. I mean, generally try to keep it, you know, around, like, if I'm just completely wrong and I go down by like 1 or 2%, I'll just close everything. It depends on the positions. Depends on how wrong. You know, sometimes things change direction. And like today, the euro was weak. It changed direction all of a sudden. Yeah, generally, if it's just wrong and it's starting to run against, I'll just close everything out at like 1 or 2%, depending. I don't have really a set limit, but yeah. Or I'll try to neutralize it. A lot of times, I try to start doing a little more of this lately. It just depends on the type of account, really. Can't really do it on a first in, first out account. But like a lot of times, like if something's wrong, like this, like Euro Aussie, it's running the wrong way, I may just offset it with something else. Like say I've got this S&P 500 position in profit by the same amount that this is down. I'll just close them and neutralize that. I'll remove that risk from the board and just take a net neutral on it. And then I've still got other positions open. So now this is no longer a problem. You know, these positions that are going the wrong way, if there's like a direction change or something, I'll just neutralize it or hedge it where it's not a problem anymore. It doesn't matter. Like you can hold the open exposure, you can hold a loss where it doesn't hurt you as long as it's hedged, as long as you have enough free margin to do that. If you're not over leveraged to begin with, that's not a problem. I do that a lot. You know, very different type of trading. It's just a different type of trading here than taking a set. Like you notice there's 0 stop losses. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 trades open. 0 stop losses and 0 targets. No stops, no targets. It's just I'm managing the net account position and I'm not worried about stops and stuff like this. Stuff something starts going the wrong way, I'll overweight it one side or the other. You know, I'll hedge it, just set it neutral. You know, if I need to, I'll just run it neutral. And if something's going the wrong way, I'll hedge it, whatever. Try to find something else that goes into profit for the same amount that this is down. Neutralize that equity, free up the account margin. Just managing the position. It's just very different way of doing things. You don't always have to have a set target and a set stop loss. I'm looking for a number and not an amount of pips. It doesn't matter how many pips. I'm looking for the net account to get to a certain level. Right now it's actually down, but I got some things in profit, some things aren't. And just I'm kind of waiting for the market to move, and then I'll figure it out and I'll overweight whichever way the market's moving. You know, that kind of thing. But yeah, generally if I get down by a certain amount, try not to let it happen. Actually, it happened on Friday. That's exactly what happened on Friday. Is I was taking too big of chunks. I was taking too big a position size. I was trying to go YOLO and hit a big run, and it started going against me, and I had too much exposure, so I just had to close it. I hit 2% and had to close it, a little more than 2%. So whatever, I gave back some of it, but I'm back in the game now. But yeah, same thing. It's kind of neutral right now. I'm waiting to see which way the market's going to go, and I'll overweight. So I'm not really worried about having a position that's negative, that's underwater. Doesn't really matter. See, like right here, I'm both long and short on Euro Aussie. I'm a quarter lot long and a mini lot short. But the net position, see Euro Aussie, I'm negative 27 and positive 21. That's almost at a neutral. So when these two numbers both equal each other, let me put this back here. This is a good example because of where it is. This Euro Aussie. I've got one position that's negative $28 and one position that's positive $24. When this net position gets to neutral and zero, I could just close them both. No harm, no foul. Wash your hands of the trade. Scratch it. I have a net neutral on it. I obviously you pay commission or whatever, but it's not enough to worry about. Or when it goes into profit, when the positive position is ahead of the negative position, you just close them both and take the risk. You just remove it from the board and just don't worry about it. Go to the next thing. You know, it's just, that's the thing. You can be both right. You can be wrong about stuff and it's not a big deal. You don't need, you know, it doesn't matter if it's running against you. You wait and see which way it's going to go. Then you overweight in that direction. You know, that's exactly what this is on this Euro Aussie right here. I'm short and long at the same time. But there's a better probability of it continuing up. So I overweighted long. I have a heavier position long than short, and I'm in both, and it, you know, I'm waiting to see which way it goes. That's kind of the thing. There's no reason to really take a loss on the short. As weird as that is, that's kind of the thing. It's, with position management like this, sometimes there's just no reason to take a loss. Even if you're wrong on the trade, you don't have to take a stop out as long as you're not over leveraged. As long as you have enough free account margin, you just try to pull the net account into profit and then just close everything out. Start over, reposition. If you're wrong about it, you just fix it. You get it back to neutral, which is what I'm doing right now. Going back to zero or wait till it gets some profit, I'll just close everything. Take a second look at the market, reposition. It's a different way of doing things. It's just, it can be difficult to follow for newer traders, so try not to get too much into that, but yeah, same idea. Yeah, and sometimes, a lot of times I will use a stop. It depends on what's going on. Like a lot of times I will use a stop, but like for this type of thing, I'm positioning instead of using stops. I'm pushing margin around. Like there's no reason to take a stop on the trade when I can just overweight it the other way. It's like if I'm short right here, it was right, and then it started going back against me. It was in profit for a little bit, and then it came back up, and now it's not in profit. But I'm also long, but I'm long at a heavier position size than the short, so it just needs to run just a little bit more, and it'll be at a neutral. See, like the short is negative $30. Here it is. It's almost at neutral right now. Got the long in profit, $29, and the short is negative $30. So it's basically a net neutral. And when that equals zero or above zero, you just close them both and it's just removed from the board, and you didn't need to take a stop. There's no reason to lose equity because you're using your account margin to manage it. And this is the thing. That's why you don't always have to take a loss. Really don't ever have to take a loss. It's just, it's not a good principle to start as a newer trader. And I know there are different levels of traders in here, experience wise, but there are other ways to do things. You know, this is kind of an example of that, where you can be both long and short and still make money, even if you're wrong. You know, even though this short was in profit earlier, but now it's not. It doesn't matter as long as that equity is covered with another trade. It could be something else. It could be gold or whatever. You know, if this short is negative $30, but I've got a gold trade or S&P 500 shorts up $30, then they cancel each other out, and you're trying to overweight. You're trying to get more positions in profit than you have in the negative, and you're trying to position for direction of the market, the entire direction of the whole market. And that's, you know, I've got like 15, 16 trades open, but it doesn't really, it's not that big of a deal. Some things are down, some things are up, but if the market starts to move, this number can change very quickly. It can go both ways. It can cut against you. It's basically hedging. Like I've hedged, I've distributed my risk across the entire market, and I'm trying to be right by a higher percentage than I'm wrong, if that makes sense. With this type of trading, you know, notice no stop losses, no targets. I'm not looking for pips on a stop or a target. I'm looking for a certain amount of dollars in profit on the net position over all positions. I'm just trying to get to a certain number on this, or a certain percentage is generally how I'll do it. I'll try to clear out 1/4%, close everything out, reposition for the whole market. Wait till it gets to 0.25% in profit, close it out. I'll inch it forward like going up steps, 0.25% at a time. And with distributed risk, no stops, no targets, nothing. It's one way of doing things. It's not really recommended for newer traders, to be honest, because it can be very difficult to follow. You have to stay on top of it. But yeah, anyway, that's kind of what's going on with that. But we're trying to find some normal trades in the meantime. Yeah, it's just we'll start getting into more of that. It's a different way. There are different ways to doing things. You know, you're looking for a percentage and not necessarily amount of pips. It doesn't always matter. Even if you're wrong, it doesn't always matter. You don't always have to take a loss. It's just a hard concept to understand as a newer trader. I know a lot of people have heard of stuff like that, but if you've never been exposed to that kind of thing, it's kind of hard to understand at first how there's really no reason to ever take a loss trading ever for any reason, as long as you're not over leveraged. And that's the key. As long as you have enough account margin, you can always get yourself out of trouble. Always. You're either going to break even or make money. Those are the only two options. There's no reason to ever lose. But you have to make sure that you have enough account margin to get yourself out of trouble. And you have enough account margin to get yourself out of trouble by not over leveraging in the first place. That's why it's very easy to make money trading. It's extremely easy to make money. But to make a lot of money at one time, it's very easy to make smaller amounts of money. But to make huge hits at one time, you have to take on more risk. It's just how it is. Your profit is directly proportional to the amount of risk you're willing to take. And it's just different way of doing things. We'll get some more into that. Anyway, hold on a second. Be right back. All right, kind of to mute for a minute. This truck outside on neighbors got some kind of gutter cleaning business. He's got his crew out there, and the dogs always bark, trying to blow everybody's earphones out. Yeah, it is best to keep it simple. To be honest, that's why I'm trying not to focus too much on that kind of stuff, because it can be a lot for people to try to take on that kind of thing, and then then it gets out of control. You got to make sure you got to understand, and everybody's account balance is different. Everybody's risk tolerance is different. You kind of got to get the feel of what size positions you should be taking and how much open exposure you should have to the market as a whole. You know, you don't want to have too much out. But yeah, it's best to keep it simple, as we're trying to do that. It's just sometimes there are other safer ways to trade than to take one trade with a set stop and a set target. You know, you're gonna get stopped out a lot doing that. But you can also do well doing it. You know, putting more risk on a single trade, that's one way of doing things. That's definitely one way of doing things. You know, and trading, working a net position back and forth is also another way to do things. Much less risk. It's smaller. You're going to get less of a profit, but a much higher probability, if not 100% probability of, you know, getting out of it, of at least making something. You're trying to make something with an extremely high probability, near 100%, depending on, you know, how much risk you want. Sometimes you know, like the other day on Friday, I just put on a lot of risk. I was like, all right, YOLO, I'm going to go for it. But as long as you got enough margin to get yourself out of stuff, it's extremely unlikely that the entire market runs too far away to get you out of trouble. I mean, it's going to have to run a lot. But if it starts running, that's also good, because you can overweight in the direction that it's going and get yourself out of it. You work it back and forth until you get the right direction. And then all of a sudden you got a position that's running that's heavier than the position that's underwater. So it works itself out, and you can either neutralize it and take the risk off the board, or take the profit. You know, you're either going to break even or make money. Now the question is how much money. Because sometimes, well, I mean, I guess dollars are relative, but you know, it's different than thinking of it in pips. It's more about net pips and not pips on a particular trade. It's like saying, it's the difference between saying I'm going to take a 5-lot trade on gold and I'm trying to get to 10 pips. It's more like saying I'm going to put out 5 lots of total exposure distributed across the entire market, and I'm trying to get to a net of 10 pips across all trades. Might have 10 trades open, but it's 5 lots of total exposure distributed across. See what I'm saying? See how much different that is? When you distribute that 5 lots across multiple trades, you're trying to get to 10 net pips across all of them. Like one might be down 5 pips, the other might be up 15 pips, but that's a total of net pips and profit, net 10 pips. Some might be down, some might be up, but you're trying to maneuver your entire account into a net profit of certain pips or whatever. Dollars or percentage is really the right way to do it. And it just trying to get the point across in pips. But gold's actually looking pretty rough here. Let's see if this is going to hold. This may get wrecked right here. If that failed, I would wait to see if this candle closes bearish, and if it does, just going to guess that it's going to go lower. It's not looking very good here. It's trying to reject. But yeah, it's the same kind of thing. You're trying to get to a net position and not just one particular trade. Just a different way. This is the way I've been doing things for the last couple of years, very successfully. Just a little different, trying to take a specific, like a single trade with a set stop loss and a set target, and you know, trying to take one particular trade at a time. It's just, you're going to get stopped out doing that because you have a stop loss. If you have a stop loss, every once in a while it's going to get hit. But if you're working the position back and forth, it's different. Yeah, it's a different way of looking at it. But you know, there are pros and cons. There are pros and cons to both. With something like that, you're less likely to make a big hit at once. You're less likely to make a huge profit at once, but you're much more likely to make something without losing. You're by far less likely to lose money doing that. And sometimes not losing is winning over time. When we talk about compounding percentages and how all that works, and some account management tricks you can do to multiply your percentage gains, those types of things. When you're having a very high probability of making at least something, that can be very valuable. And when you get to a higher balance, that's the kind of thing you want to be looking for. You're not going to be putting out 100 lots on a trade with a 10 pip stop. That's crazy. It's nuts. You might take 10, 20 different trades at one lot a piece instead. Still taking less risk, making the same amount of money with much higher probability. Or make less, you'll make less profit, but you have a much smaller probability of actually losing money. It's different. It's a different way of looking at it. That's the thing. When you get to a higher balance, once your account starts to grow, the game changes. It becomes, how do I not lose money? How do I keep this money? Your whole mindset on trading changes when you get to a higher balance. It's just, it becomes, I fought hard to get this. I do not want to lose it all. I'm not taking 100 lot trade. I'm not going to risk losing. You get some weird Brexit candle or some stupid thing that happens in the market out of nowhere. Now all of a sudden you just lost 10 grand, like instantly in one candle. But you get slipped 20, 30 pips on your stop loss because they just didn't want to or couldn't fill it in time. That's crazy. Especially when you're talking about 50 and 100 lot trades. Like, it's nuts. You think financial institutions, banks, think Goldman Sachs has you think they've got $100 million position out there? You think they got a 10 pip stop on it? Lol. Not how it works. That's not how it works, especially with higher balances. There are no such thing as stops. It's net position. But yeah, it's just a different way of looking at it. Just trying to work through this thing, doing that same type of, just working the position back and forth. So your Aussie's looking good. Been better. Anyway, it's kind of off topic, but kind of worth talking about. Yeah, it's just the way I'm used to doing things. Just very different. If you're wrong, you fix it. If you have a position that's wrong, you work it back to neutral and then close it out. Remove that risk from the board. You remove the exposure, de-risk it, unwind it. And then you focus on the things that are in profit. So the idea is to leave the things that are in profit running and neutralize the things that are wrong. Get them off the board, get them out of the way. Try to bring it net back to net zero, and then let the things that are going work. And then you end up with a situation where you're either going to break even or make money. Now you're not going to get as big of a profit as if you put all of that risk on one trade and it goes. But you're trading, and we've had this conversation many times in the past. You're trading risk for safety. It's the same thing. There's always a trade-off. We've talked about the trade-off between time and profit. That's one trade-off where you can either make a lot of money in a short amount of time, or you can make a little bit of money in a longer amount of time. But there's always a trade-off between risk and safety there. How much, how risky is it to get that? If you're trying to make $100, there are many ways to do it. If you have a set percentage target or set dollar target, just arbitrary number like $100, say, look, I want to make $100. There are many ways to do that. Now you can take a lot of risk. You can take a one lot trade and try to get that $100, or you can take a mini lot trade and try to get that $100, but you're going to have to take it 10 times farther. But you're also taking 10 times less risk less risk to your account. There's always a trade-off. We always use the example of, there are two traders. One trader took 10 lots for 10 pips. He sent 10 lots for 10 pips. And another trader sent one lot for 100 pips. They both made exactly the same amount of money, but one of those traders took 10 times less risk to get that same amount of money. And sometimes it's about the ratio of risk to profit and not necessarily P&L, profit and loss, or win rate. Win rate is the biggest joke of all, honestly. You can have a 3% win rate and make a lot more money than somebody who has a 99% win rate. It depends. And the factor there is the ratio of risk. It's the risk factor. How much risk to profit ratio, not necessarily profit and loss. How much risk did you take to get that profit? People say, oh, I made 10 grand today. Okay, but you took, you put a 30 lot trade out there with a 3 pip stop to do it. That it depends. It depends on, both can work. Both can work. And I think the real factor on whether or not you're a successful trader is how much risk are you taking to get to that dollar amount. You have two traders and both traders made $100 today, but one took 10 times less risk to do it. Then there's your answer. That's the factor. And you'll start to, especially as you get to a higher balance, you'll start to think that way. It's how can I make something? How can I just make something today and not lose any money? Or how can I, if I take a loss, how do I minimize that? How do I make something without putting too much risk out there? Because I don't want to lose. I don't want to go backwards. How do I not go backwards? If I'm not going backwards, I'm going forward by a small amount. And if you go forward by a small amount consistently, and your targets are percentages and not pips, then you can really do some pretty serious compound percentage stuff with your account. That's the idea. You want to compound percentages consistently and not necessarily say, I want to make $1,000 today. You want to say, I want to make a 0.5% today. I want to make 1/4%, 1/10%. On a larger account, you want to reduce the risk. You don't want to take risk. You don't want to take more risk just because you can. As your account grows, you take less risk. Because that makes it, you're trading risk for safety. You want to take less risk because by taking less risk, you have much more free account margin to make a much higher probability net position outcome. You get a better outcome on your net position by taking less risk. You can afford to work your positions back and forth. You take less risk per trade, not more. If you say, oh man, I wish I had $1 million balance, I'd take 100 lot trades. I would do the opposite of that. I would be taking smaller amounts, but basically guaranteeing something. And by guaranteeing something, by taking less risk, you work that percentage over time, compound the percentage over time. That's how you really get wealthy. Why is my stop loss so small? Because if it goes back below that level, then I know that I don't want to be in it anymore. Because what's happening here is we're stepping up in a range. And if it goes back and breaks back below this consolidation, then I know that I don't want to be in this trade anymore because it's probably a lower high. But if it doesn't go through there and it stays in this range, it's likely to continue higher because price steps up and down in ranges in consolidations. So that's exactly why. That's a fair question. That's why my stop loss is tight, because it doesn't need to be big on this. If I know that if it goes back below here, I try to leave a little bit of wiggle room for wicks and stuff. Sometimes the market just does crazy stuff, and then it'll slam down and slam back up and then go. But if it goes back below this level, I don't want to be in it anymore. I'm looking for a sustained move to the upside, and if it doesn't do that, then I'll just, whatever, take the break even. We've got a kind of a choppy market here. Hey, what's up? It's not really. I don't know. It's just on YouTube. Talk about Euro Aussie eight pips. And depends on the trade. Yeah. Yeah, it depends. It depends on it depends on the time frame you're changing. Depends on your lot size. Yeah, I mean your lot size has everything to do with it. Or I'm just trying to help throw some trades on, but yeah, I was just saying it's below the top of the range here is where it is. It's like an entry right here, and then but the real reason why is because if it comes back in this range, I don't want to be in it anymore. You're just asking why the stop loss is so small. It's 8 pips, but it depends on the trade. It all depends on the trade. Some people take very large lot sizes with very, very small. That's what we were just saying. Some people take extremely large lot sizes with extremely small stops, and that works. You just keep trying until you get it right. Some people trade with no stops, like I was just talking about. Hit 1% today with 0 stops, 0 targets, nothing, no stops, no targets. There's just different ways to make money in the market. It's hard to say that one is right and one is wrong, but the facts are that some strategies take much less risk than others, and then sometimes it depends on what your goal is. It really depends on how fast you want your profits. Sometimes this euro yen looks good here too, actually. That's one thing that changed is the euro today. Some people want quick money. Some people want to survive the long haul. It just depends. Depends on what you're looking for. I mean, it was good earlier. I mean, I was done by about 30 minutes. I mean, the pound moved. I took a basket of the pound early and was done. I'm just in some other stuff right now. I've already hit what I need for the day. I've just got a net position on. Just a bunch of little tents, bunch of little mini lots on, just waiting to see what's going to happen here, waiting for the market to move. The euro changed directions. Yeah. I was looking at, say it started dumping. Yeah, I mean, I'm short S&P. Yeah, stuff says if it looks like it's going to run on higher time frames, I'm just going to, that's what I'm saying, take a little position on it, let it go. See what happens. If it comes back up, then whatever. I figured it was going to stop right here. We were just talking about that. See if it's going to range and dump through it. Hopefully it does, but I missed the NASDAQ ran early. It took off and it wasn't really as good of an entry. I don't know. We'll see. Looking short. I'm already short on it, waiting to see. Should have taken it from higher. I actually wasn't here. I don't know if you were here this morning. I actually just got back not that long. I had to run to the airport today, so I missed a lot of London because I had to go to the airport. But
not vaccine, COVID test, because we have meeting with the school tomorrow.
Okay, yeah.
It's like this quick test. You get it within 10 minutes, 15 minutes.
Yeah. Yeah, it was good early. I mean, the pound moved earlier, position for the pound, and it all shot up, and then it just kind of stopped, and the euro was going down, and then it changed directions. The pound, the dollar, and the euro are all going up at the same time, so it's kind of boring. We got Powell today. I mean, it was good earlier. I mean, basically right out of the gate, I was here early. We caught this whole move on the pound, just position for everything on the pound, and just they all ran. I put a half a lot on every pound pair, and it all ran like 30 pips, 30, 40 pips. And that was it. I had a couple other things. Had some euro shorts that ran, and then it came back. So right now I'm just piddling around because I've already basically done for the day, but still here. Not really done. It's all, the trading is never done. Euro Kiwi's looking good here. Still, this euro and Kiwi are, the Aussie and the Kiwi are really weak. Swiss is weak. That's another one. This pound Swiss is still good. Just stuff's all over the place, man. It's choppy today. Everything's choppy though. It was this morning. Before that took off, it was garbage. We were looking at everything. Stocks were choppy, and then all of a sudden everything took off. At seven o'clock, everything dumped. But before that, like all during early London, it was nothing, just zero. There's zero volatility, and then all of a sudden it took off. So yeah, we're just chilling, man. Everything's good.
Watching stocks and SPX because it's gonna be volatile. It's gonna be so volatile today.
Yeah,
you all see. It's important
about,
to just watch today.
I would Powell, we got FOMC. Yeah, gonna have Powell coming on. It's not until 2 p.m. though. It's so 5 hours from now. Like
the thing is, the market could
6 hours.
Yeah, but the market just gonna be dead because everyone's gonna be like cash.
That was the whole thing this morning. We were saying it's probably gonna be slow today. Got some movement though early. I mean, stuff's moving a little bit. The euro actually started moving. Like it's Euro Kiwi, Euro Aussie, and all this. Like it's still looking good. Still good.
Not bad.
Yeah, just in a big net position. It's just going back and forth right now. It's a little small risk. Nothing really. I've already hit what I needed for the day. And
ECAD looks nice.
Messing around.
Because it broke out and then now it's coming back to retest the range. That looks good.
This could have been a we were looking at this earlier. Yeah, this thing is so low, man. It's crazy how low this is.
Low, yeah.
It just won't go back up. It tried. It's just, I don't know. Look, the CAD started gaining, is what it is. The euro is strong, but so is the CAD. This is the problem. Everything was going the same direction this morning. Everything was going down earlier, all at the same time. Everything was moving down. Now it's kind of changed a little bit, and everything's going up. Dollar going up, CAD going up, the yen's going up, euro's going up. Kiwi and the Aussie are steady moving to the downside. Whoops, like going out higher time frames. I mean, the euro overall is coming down over time, but right now we're in a pullback phase. The pound's moving up. Just everything's just kind of flat. The dollar's moving. The dollar's showing some strength. So some like Kiwi dollar short, Aussie dollar short, those are running.
Slide down 3%. Okay, GG.
What was that? I thought I had Aussie. Yeah, okay. Yeah, I'm an Aussie dollar short and Kiwi dollar short. Yeah, I mean, it's just, I don't know, man. It's one of those choppy days. It wasn't bad. Like, it was okay earlier. It was really slow. The pound moved really early. All of a sudden the euro changed directions. The euro was really weak. It was all moving down and then it slammed to the upside. The euro is the thing that actually really changed the most. It was looking pretty crappy earlier and then it slammed back up. So just trying to capitalize on the strength against something that's weak, which right now is the Kiwi and the Aussie. So, Euro Aussie and Euro Kiwi longs. Ooh, Swiss franc killed. Swiss franc's getting smoked here. On Swiss probably would have been a good one.
That's what I looked at.
It's just, this is messy on the pound. Caught this whole run up here and then it slammed down and now it's going back up. Pound yen, pound dollar, all the same. It was all moving up and then slammed back down.
UCHF had a good move.
Pound Aussie is good. Pound Kiwi and pound Aussie are probably the best trades. They were. I'm still in it. Still in it from earlier.
It's not bad.
Pound CAD. I mean, there's your range low right there on pound CAD. Third time's a charm. Pretty well defined range low right there. Above a previous consolidation. Doesn't look bearish anymore. That CAD rolls over and makes a lower high. This thing's going to go back up and watch that. There's a possibility right there. It's a consolidation coming off a low. It's not bad. There's technically room on it. It's just not really amazing as far as the entry goes because it's already bounced. Taking it from the low here or from the top of this range Would have been better. Still watching. We're gonna find some stuff. See if the S&P is gonna keep going. I don't know. I don't trust it now. Figured it was gonna bounce here, and I literally just said that it's probably a good idea to take profit. Because of that, there's likely to be a reaction here. One of those magic levels.
Yeah,
it's algorithmic movement. It's just algorithmic movement. I mean, came right back to equilibrium, bounced big. I mean, this kind of put in a tweezer bottom there. The question is it going to be a range or is it going back up? This could easily just reject and end up in a range like this. We could have sellers on the top, buyers on the bottom here, and it could just be a range and going back and forth. We're about to figure that out right now. It looks like it's probably rejecting here. So we'll watch that. It's still possible that this rolls over and breaks the low. Rather be short than long. No reason to get out of it. I don't know. Just watching that right now. Waiting to see what's up. The euro is strong. The problem is everything else is strong except the Kiwi. Everything is going up. Short term, everything except the Kiwi, really. The Aussie's even turned up. It's weak, but it's turned up to the upside. The Swiss franc and the New Zealand dollar are going down and everything else is moving up. Everything is holding strong or gaining strength as an index. So it's kind of whack. Yeah, Euro Kiwi long, Euro Aussie long, both. Men both. Buddy, chill out. Hey. Oh. Got a nut. Yeah, kind of what we were just talking about. Actually, hold on. Come on, S&P. Want to see this dump back in. Want to see this reject. I mean, we pretty much got an idea what's going on here. We've got our sell side defined. It's probably going to be going down. Looking good. Euro Kiwi. All right, so that's back at an important level. Here's a good example right here of what we were just talking about. So I've got these Euro Kiwi trades. Got one that's in profit more than the others down. I've got one short and one long, but I'm overweighted long and it's in profit by $9 more than the other one's down. So what I'm going to do is I'm going to remove this risk. I'm going to close this net $9 on Euro Kiwi. I'm going to close the one that's negative and close the one that's positive for a net gain of $9. It's going to change. You're going to see this number change, but Euro Aussie, same situation. I've got one in profit by more than $10 more than the other. I'm going to close that out. I'm going to remove that risk from the board and close that out and take the gain. So that was a net gain. See how that number really didn't change that much. So now I'm going to work these, continue to work these back and forth. And pound Kiwi. Yeah, I'm going to see what's negative and then what else is positive, and if it's worth canceling them out, then I'll just do that. And I've got pound dollar that's down, but I've got pound Kiwi and pound Swiss. It's up about the same amount. Like this Kiwi dollar, whatever this is, I could cancel that out. That's $15 plus this 13. I'm going to leave S&P actually. Pound Kiwi. Oh my God, this thing's moving back and forth. That's how I keep closing the wrong thing. Pound Kiwi, I'm going to close out. And what I did is I just offset the equity for this. Now I can close this pound dollar that's being a problem. I just closed out the profit that was more or equal than what that's down. So what I'm doing is I'm removing that risk. I'm pulling that risk off. So I closed out $27. Just about, almost exactly $27, 15 plus 1160. It's like 2680, and I offset that negative 27, and I just removed that problem from the board. It's basically a net neutral. And then what I've done is I've reduced the exposure, so now it can't hurt me anymore. And what I'm doing is I'm working this back and forth, and I'm going to reposition on stuff. I'm waiting to see. S&P is still good. Got to have a contract on that if that'll actually go. Yeah, Euro Aussie's pumping right now. Let's see what else. Aussie dollar. Let me just close that. That was already down. There's a little $10. It's pound Swiss. Close that out. So that was like $20. And I'll take off this Euro CAD that's being a problem. Pound's strong, so I'm going to leave pound yen on because it's likely to come back to break even. Go back to pound yen. What I'm going to do is I'm going to put a break even stop on this because it's more likely to go up because the pound is strong. It's more likely to go up and get knocked out at break even. What I'm doing is I'm trying to remove all of this risk from the board so I can keep all my profits. And I'll reposition. It's just different. Notice there's no stop losses. There's no targets. I'm just working it back and well, except now on GJ because I'm trying to get it back to break even. I'm just going to work this back and forth and wait. And if the S&P dumps, this whole thing will go into profit. Dollar CAD, that probably doesn't need to be there. It was just a little tiny. I was just positioning for everything. Pound Aussie, I'm going to leave on. Pound's likely to continue strong, and the Aussie's weak, so I'm going to leave that. I'll leave this pound CAD on. I'll leave my pound pairs on. My euro yen short, I've got to figure out something with that. But you see kind of the idea, just kind of working it back and forth, knocking stuff off. If it's wrong, it's no big deal. Just fix it. And then I'll find something else that's likely to go into profit, which like this GJ right here, probably should buy this again, to be honest. Matter of fact, I might do that. I'll put a small piece on it. It's likely to go back up. And then I'll put my target at break even of the other trade, and then one will close at break even, one will close in profit. It'll be a net gain if it goes back up, and it's probably going to. Got this stuff on here for the bot that doesn't really need to be there, but so yeah, just working it back and forth, and then I'll reposition on everything. Get in. I'm looking for something else. Good game on Euro Kiwi and Euro Aussie earlier. Closing some of that stuff out because, you know, even though it may continue, I was using that surplus of equity. I was using that equity gain to fix a problem. And there's no stop loss necessary. There's no loss that was incurred. It's just not really recommended for newer traders. Euro yen, this is a maybe. Euro Swiss, what's Euro Swiss doing? Yeah, it's already moved too far. That's probably about to reject here anyway. Probably going to consolidate up here. There would be no reason to buy this past that. It's already moved too much. That was a big move up. It's low though. It went below the weekly projection. Yeah, I would wait for this to pull back in range. This pair doesn't move very much, but if the setup's there, it can be positive equity. Yeah, this is probably going to do that kind of thing in range. No reason to mess with it right now. Aussie. Good. This needs to pull back a little bit. It's going to hold this level probably. Watch that real quick. Still looking okay. Come on, S&P. We got a block forming right here. We've pretty much got our sell zone defined and our buy zone defined. We want to see which one is going to be gone. We want to watch where price goes. I'll tell us if the sellers are still there or if the buyers are still there. And one of these two sides is going to win. Either there's going to be more sellers than buyers or more buyers than sellers. One of these two things is going to disappear. And we'll know that when we get a big full candle close inside of here, which means that these aren't filling anymore. If there's a candle that was allowed to close big full down here then we know that there are no more buyers. And it's more likely to continue down till wherever in here, the next level where your buyers were. It's pretty, you know, how it works. So we're watching that, you know, we'll watch these known levels on the way down. See what happens. Hopefully this is going to die, but I want to see how this is going to resolve first. Right now, what's kind of going on right now is you got a trap on the top. Looks like it's forming the trap right here. And this is very likely going to dump. And that'll be a level that it'll stop up on the way back up. Whenever it does come back up, it'll probably stop there. Assuming this closes like this in 2 minutes. This short still looks good. Basically. Make a short story long. Short still look good on the S&P. See, this stupid dollar, man. Look at it. Messy. It's just nothing. It's just sideways. Lol. Lol. Troll market. Wrecked. It's trash. Trash bag dollar. Nothing to do there. It's back in the range. It looked like it was going to move and didn't. Garbage. Wrecked. But yeah, anyway, pound yen looks good, by the way. The yen's rolling back over and the pound's holding. Probably room on it. Pound dollar might be the same. Pound dollar looks like that's going to bounce. Pound CAD looked like it was going to bounce. Pound yen's probably the better trade. Pound dollar's probably right behind it. Pound Swiss has already left the building. Needs to pull back a little bit. Pound Kiwi's another one. Ended up just being good. Really solid price action right here. But he got a higher time frame level here. And you got a lot of sellers up here. That's why we were watching this level. And I think it was 4 hour, yeah. Had a lot of sellers here, so that was the move. You know, catching that move up was it. Yeah, that's now it's sketchy. Now you're where the red hammers lie. Where the red fern grows. That's an old school movie right there. Good Lord. Where the red fern grows, I think. Old school. Here was that 1974, Jesus. Old school movie. The dog. What was the name of that dog? The sad movie. Anyway, funny. It was an old movie when I was a kid. It was old. I just remember they used to play it on TV. Anyway, it's where the red hammer grows. Is right here. This is where the red fern grows. Go smoke a Swiss Franc. It's funny. Swiss Franc got smoked. Actually funny. Smoking on Optimos. Old veiny Optimo. Euro Kiwi. Euro Kiwi and Euro Aussie are still okay. Euro Aussie's probably in better shape than Euro Kiwi is. That stays. Like the yen's pulling back down. Pound yen to the moon. Let's go. Moon, bruh. Need to see more out of it but it looks like it's going to go kind of right in the middle. But my guess is that's going to go break that high. It looks like it's going to go break the high and retest this up here. It's like a range. It's just a big range, and it's heading back up. It held. It's heading back to the range. Or to the high, I mean, to the range high. In the middle, you got lower highs. It's contraction. You got lower highs and higher lows. But that pound is strong. If the yen rolls over even a little bit, this is going to go up because the pound is very strong on higher time frames. It would make more sense that this pokes high than comes down from here. If you look at the 4 hour, not really much here. There's some sellers stepped in and on that previous candle, but still looks okay. Stupid high though. It's ridiculous high. But right now it's going back up. You gotta play the cards you're dealt. Yesterday it looked like an epic short. It was a good short yesterday, but now it's coming back up. And now we've got a different piece of information that this is very likely just a range instead. It bounced at that previous level right there. That was the low. It was whatever the March 9th equilibrium was the low. Now it's in a range, so it's changed. The pound's still strong is part of the problem. Pound is just bullish. Stupid bullish. Still going up on higher time frames, just pointing toward the sky on higher time frames. Like the euro is going to be gaining too. That may have just been a pullback phase on the euro to go higher. Good, your Kiwi's still good. I don't know. 850. It's crazy. We hold here. I think this trade's still good. Euro Aussie. I think that's still money. Just creeping up. Good, strong. See if that holds right there. Honestly, this may not be a bad opportunity to get back in it, to just catch this run right up here, just to catch that. I mean, that's 30 pips almost, just to the halfway mark. And you got a target high here coming off of a higher low. Overall, higher time frame level. I mean, you got higher lows. And it's bullish again. You know, if it goes and breaks that high like that, not a bad guess. The euro is strong and the Aussie, or the Kiwi's weak. The Aussie's weak. Kiwi's another one. It's probably doing the same thing, going up. This one hit these sellers right here. It's consolidate on this level. So you got sellers here and a level that's likely to consolidate in this zone, this whole area. That's going to fill back up to the upside. Euro Kiwi longs. Position on that right now. Looking for that to fill back up. No real target, just gonna go a little bit up, see if it goes. If not, I'll fix it. There's your bounce right there on Euro Aussie, looking good, looking higher. This would actually be a good spot right here. You got a failed reversal right there at the halfway mark. It's right there, just short of the halfway mark. And when price was right here, it was dumping, tried to reverse and go retest the highs, sold off. So this was your sell-off point. You got trapped longs above this level. That would make sense. It would make 100% sense for this to, I mean, that's another 20 pips from here. 30 pips from the bounce point. 25 pips, 23 pips. With the potential to break the high. But even if it's a lower high, which is also possible, it's still likely to make it up there. I mean, we're right in, there's nothing here. We're clean to the left. It's a clean run up. Just if you're looking for a scalp, you're Aussie. Still good. Good. That'll pull back. I put a bigger position on it. Just already in it. Same thing here. Euro Kiwi looking to go higher. Looking good. Looking good. Give me 1 second. Hey, Ibby, what's up? Sorry, I just saw the chat. Yeah, I appreciate it, man. Yeah, thanks, man. Yeah, thanks for being around, dude. Yeah, Ibby's been around for a very long time. Yeah, a very long time. Yeah, I appreciate it, man. Good deal. Always good to have you. You know that, man. We have differing debates sometimes, but no, nah, man. It's always good to have him. Ibby's a very smart guy. It's good, very good resource to have. Oh, I see the drive-by disliker has struck again as we're making money. Pretty crazy how that is. Rival streamer shows up and says, oh my god, he's got a position in profit. We have to dislike the stream right now. We can shut the whole operation down if we just dislike the stream. Lol. Anyway. See my trades. This is my every trade you see on here. There's a trade on it. I don't put fake trades on the screen ever for any reason. Every single, and I own it. I own it when I'm wrong. That's another thing that I doubt anybody else is really doing, is showing losses, showing trading history, showing live positions, that kind of. But yeah, no, there's always positions on here. But yeah, that's what I do in the group. I show my stuff on the other side. See the real positions, and through the good and the bad. It's really easy to just make videos all day and just show a bunch of, make Instagram posts and show only good trades. It's a whole nother story to do this every single day for years, through the good times, through the good weeks and the bad weeks. Very different. Yeah, I guess you're always going to have losing weeks, losing days. Just how it is. Market's been really tough lately. Honestly, look at the higher time frames. Look at the chart. Attack of the dojis on higher time frames. Yeah, it's been a tough market lately, but it won't be that way forever. Everything will go right back to normal, and we'll forget about all these bad times because we're gonna be slamming it so much, going back to those 200, 300, 400 pip days all the time. Just been a really tough market lately. Got some good trades on today. Stuff's behaving, I guess, today. It's not too crazy. It's just not really great price action. Overall, the price action's not amazing. But got some things happening. Yeah, that's one thing I do in the group is I show everything. I show my trading history and all of my live trades, live accounts. It's just, I don't know. I don't really need to prove anything. Been doing this every day. I think, again, this is my 4th year of streaming trading live on YouTube every day for 4 years. That is my track record. I just don't advertise. There's not many people here because I don't advertise. It's actually something I need to do. People still come and they're like, I've never even heard of you. Like, they didn't even know I was here. I've been doing this every single day for 4 years. Every day. And it's just, I don't know.
And I don't know what happened to YouTube, but normally when I do live forex trading, I find you at the top, and now you're gone.
Yeah, it's I haven't been getting listed. I don't know what's going on with that. Yeah, that's actually that's an interesting point. I've noticed that myself. It's been happening for a while. It's just I don't know. It's just it doesn't get listed. I don't know what it is. I have no idea. Sometimes it does, and sometimes it doesn't. And it's weird. It's just I don't know. I don't know what's going on with that, but yeah, it's true. It just sometimes it doesn't. You can even search for it and it's just not listed. You can even search for the stream by name and it's not listed sometimes. I don't know what the deal is with that, but there's nothing. I can't control it. The YouTube algorithm decides what people should see and what people shouldn't see. Yeah. Oh yeah, Soren. I am talking about some other things. I've kind of talking to the group on the other side at the same time as I'm talking to YouTube a little bit. Every once in a while, I'll come on for a few hours, and then we do a lot of group stuff in the morning and try to figure out what's going on for the day. And then I'll come over and do a little bit of YouTube stuff for that exact reason. Is because if I don't, people don't. I mean, if there's no content here at all, there's no reason for people to be here. So every once in a while, I gotta come on and throw YouTube a bone. But all the good stuff happens on the other side. It's so much more in depth on the other side. And there's also some other really good traders. Come on, you're a Kiwi. Good. Always different traders from different backgrounds and different styles. And when you have many people trying to solve the same problem from different perspectives, that can be a good thing. And a lot of times where, I don't see something that somebody else will see because I'm looking for something else. And you kind of get that confirmation, not really confirmation bias, but you get that blindness where you're looking for something so you may not see something else, or you may be looking at pound dollar and something's happening on gold that's important, but you're too busy looking at something else. It's always good to have other eyes on more eyeballs on the problem. Yeah, sometimes I'm talking to the group, talking code. So people, they see what I'm annotating on the screen and what I'm talking about. It's just, I wouldn't expect to be able to follow it on YouTube. It's just not going to make sense all the time, but we'll still talk through price action, and if you listen, you can get some good information without giving everything away. Euro's looking good. Euro yen, good. Euro yen's looking good here too. Just did a thing. Wait for this to pull back and position on that. It's just clean. It's clean to the left. I mean, we're got a little bit of mess over here, but it's pretty clean. I would say it's pretty high probability that's going up. That would pull back a little bit. So yeah, that's kind of the surprise for the day is the euro. The euro definitely changed direction. It looked like it was going to be a short early. It was weak earlier, and then it just completely changed directions. So that's a thing. Come on, Euro Aussie, let's go. At this point, by the way, there should be no reason to really have a stop on this. You should have a stop at break even on this. There's no reason to be taking that risk anymore on this. It's moved far enough. I mean, it's up 25 pips at this point almost. You should definitely have a stop at break even on this. There's no reason to take a loss. Just looking for higher. We're about to run into some issues. But 54449 to run into some issues here. Somewhere in here. But that'd be the target up here. Failed reversal right here. Price tried to go back and retest the high and failed and sold off. So you're going to have trap longs right here. You're going to have buy side liquidity right here. And when this gets up here, in order for people to close longs, they need buyers. So they're going to target this liquidity right here on the buy side. Let's go. But actually, it's funny. This line actually has nothing to do with candles. Zero. It's actually a calculation. Has nothing to do with these candles right here. But it also happens to line up at a place where there's also likely to be some selling going on, some profit taking. So, I mean, it would make sense for this to continue higher. It's probably going to mess around a little bit, but I think the trade's good. I think this trade's good for 40 pips. A little bit higher. I think it's going there. But I don't see a reason why it would stop. And it may even continue higher than that, but we're going to take profit right here. I am. That would be an appropriate place. I mean, if you just wanted to close it, you could do that too and just take the win, go to the next trade. I mean, that's almost 40 pips. There is a possibility of a higher move though. It's within reach. Statistically, the high of the day is up here. So it is absolutely within reach. It could be a short daily candle. It's kind of short stroke the daily and make a lower high. It's possible. However, always want to target the best you can, scale out, target the highest reasonable target, and scale out on the way up at inflection points. This is likely to be your inflection point right here where we got it marked out. Let's go a little bit more. Euro Kiwi's looking good. Euro CAD still good. See how this changed? We're working that position back and forth. Now I got this going. Now it's in profit. I'm waiting, just trying to squeak out little bits. Squeak out 50 bucks here, 100 bucks there, kind of thing. That pound will move. This thing will go. This could be a bigger number later if the pound will actually get stronger. Pound yen's looking really good here. That doesn't look bad. I mean, it just looks like the pound's going to be stronger. Yeah, welcome, Soren, by the way. Welcome. Welcome. Yep, we're here every day. Every single day for the last 4 years. Just don't advertise, really. I used to be on Instagram. I tried to be on Instagram for a little bit, and it's just takes a lot of time. I need to speak. Where's Floey? I need to speak to him. He had to help me with that, actually. I don't have time to do it. To archive, these trades that we take all the time. There's so much good content that just gets forgotten. It's just how many hundreds of trades that are, 60, 70, 80, 100 pip trades, 150 pip trades, and they just get lost in the ether because I don't archive it. Just how many times, just get all these crazy trades on, and, sometimes you get stopped out, but win a lot more than you lose. And, just never archive that. It's valuable content over time. Just never archive it. I need to actually start doing that. It's just not, it's not priority. It hasn't been priority. I've never been worried about being famous on YouTube. But might need to get out there a little more. S&P's looking good. Shorts looking good. Want to see if this is going to make it back down again into the buy side here. We're trying to see how this block resolves. We know where our buyers are. We know where our sellers are. We want to see this hold down, or hold up. One of the two. Right now it's still selling off on the top. So we're going to wait and see which way this resolves. We'll know if the buyers are still there or the sellers are still there. One of these sides is going to disappear, or there'll be no more people willing to sell or no more people willing to buy. We don't know yet because now it's sold off again. Hopefully this is going to continue low and break that low. Square up, break the low. Take a big, huge dump. Going to be looking right here. First on the way down. Then below that, we're looking to break the low, probably. Crazy. I mean, there are some buyers in here, but nutty thing is that's only halfway. This is within range to do some really crazy pips today. Like, statistically, this is your low of the day. Way down here on the S&P. So I'm going to hold this one. This could actually take off. Like, it might actually do it. It's within reach. Nutty trade. Like, it could be a huge move. Hopefully this will go. Watch that for a minute. And give me just a second. Be right back. Alrighty, YouTube. Take a look at these 4-hour candles. See what we got. Let's look at structure. Non-biased. Non-biased, look at the market. Objective opinion. Let's see. Buttcorn. Since we got a new 4-hour candle on this 9 a.m. candle is a new 4-hour for most currency. Buttcorn still okay. It's in a range. It's a range. It's not great. That last 4-hour candle wasn't amazing, but it's just still a range. I don't really see a reason to take a position either way, unless you're trading much lower time frames, you know, like 5-15 minute kind of stuff. My guess is it looks like it's going to go lower, but it's just depends on your time frame. All depends on your time frame there as far as the 4 hours concerned. I mean, that's not a good daily. I don't know what universe you could be in and say that that's a good daily candle or good structure at all, but it's Bitcoin that can do anything. Bitcoin is so sensitive to being pumped. Who knows? I don't know. Anybody can say anything. And this thing will move. I don't know. It doesn't look good right now. It looks like no trade right now on the old Buttcorn. Dollar wrecked. It's garbage. It's complete crap. It's just in a choppy, flat range. It's nothing but dojis and hammers. It's wicks. There's a higher percentage of wicks than bodies, and that is absolutely crazy. If you look at it, look at that section, this series of price. There's a higher percentage of wicks in this than candle bodies, by a lot. Pretty clear to see that. It's nuts. It's all over the place. Selling off again on the highs. I mean, there are clearly sellers here, but it's also not dumping. Who knows? It's not dying, but it's not good either. It's not dying and it's not flying. That was a good close on the S&P, by the way. It's respecting the buy side, but that was a good close. 4 hour on the dollar is just garbage. Nothing to do. So that no trade. It's hard to take a directional bias on the dollar when you get in this kind of price action on higher time frames. 4 hour, we'll call that a higher time frame. Euro Aussie still looks okay. We're looking to get up a little higher. I think it's still good. And I mean, when you put it this way, when you look at the actual macro structure, kind of puts things into perspective. Where are we in the universe kind of thing? It's not like it's high. At least you're buying low. It's almost like buys only on this. You're always trying to catch the low of the day until this thing goes up. Like, it's so low on the macro that eventually there's going to be a mega run like the world has never seen before. Euro Aussie and Euro Kiwi both same situation. They're just dumb low on the macro structure. In the grand scheme of things, it's ridiculous how low this actually is. We got a higher low here too, by the way. I'm just only looking for longs on this. Only. Every single day I'm waiting for this thing to move. Euro Kiwi, same situation. It's crazy low. It's not like you're buying high or anything. So what worries me about pound yen is it's stupid high. We'll get to that. Euro CAD, same situation. This has come down so much in a very short amount of time. Just eventually looking for this thing to pull back up, probably in some kind of range. Probably going to be in a range like this. If I could draw a straight line. That's just not really. It's already kind of moved up a little bit. You know, right now we're just hoping the euro strength carries us through. The CAD has been so strong lately because of oil. And that's another thing we'll get into in a minute. It's the positive correlation between the Canadian dollar and oil. And if you look at what oil's been doing, that explains why these CAD pairs are running like this, because the Canadian dollar is just X Games mode. It's following its buddy oil all the way up. You know, the stronger oil gets, the stronger the Canadian dollar gets. Because there's a fundamental correlation there. We'll get maybe back into that later, but yeah, so Euro CAD eventually, when oil comes down, this is going to moonshot to the moon. Euro pound, not much to say about this. I mean, it's a choppy range. Euro pound can be difficult to trade anyway, because of the dynamic between the euro and the pound. Especially lately, it's been really choppy. This last day probably has been just pretty messy. It's just all over the place. There's really no direction, so it's hard to take a directional bias between the euro and the pound and say that one is stronger than the other, necessarily. At least price action wise, it's just, there's really nothing here. They're both about the same. I know the euro has been very flat. I don't know. There's just not much there. Not much to trade. Euro yen looks pretty good. That was a really good candle in that last 4 hour. It's somewhat a range. I mean, you definitely had a consolidation here. Had a consolidation, and we've moved beyond that and defined some kind of a range high and potentially some kind of a range low down here also. So now that we've probably identified a range, looks like it's going back up to the top. We got a really bullish 4 hour candle here, getting a little bit of a pullback, which is normal. We just got the new open 20 minutes ago on the new 4 hour. It's normal for this to pull back a little bit. See if it continues higher later. I mean, there's really not much here slowing it down, at least higher time frame wise. Looks like Euro Yen's good to go. The Euro's strong. The Yen is also strong, so that's kind of, the Euro is actually stronger than the Yen right now. So any weakness in the Yen, and this is going to go higher. That's something we'll monitor as the day goes on. Euro Yen still looks good. I'm actually long. I took Euro Yen long on that pullback. Euro dollar, same situation. Just don't know what the dollar's doing. The strength in the euro is probably carrying this. I don't know what's going on with this though. It's all over the place. Same thing. It's just a range. Got buyers here everywhere, and we're coming off the low. It's very possible that this goes up quite a bit from here, and that could kind of foreshadow what's going on with the dollar. Maybe it's either going to be euro strength or dollar weakness or both, but it's possible that it could be both. Right now the dollar and the euro are both strong at the same time. Price action wise, this looks like it's going to go higher on euro dollar. I mean, look at the 4 hour. Looks like it's going to go higher to me, especially short term. It's like it's got a long way to go too. Got at lower time frames position on that. Just messy right now, waiting on the dollar. Where is it? That 1 hour looks good on euro dollar. Holy cow. Just looked at the 1 hour. Like money to me. The railroad tracks and a small body pullback coming off of a range low, higher low. 1 hour looks good. Yeah. Looks good. I'm down with that. Watching euro dollar for pullback long. Trying to buy pullbacks on that. Looking good. Back to this real quick. One S&P. Square up and die. Looking really good there. That 1 hour is looking great. Let's get that big money move. Come on, bruh. Hold on a second. Fix start. Waiting on the S&P to die. Euro dollar looks good. Euro is very strong. Dollar's pulling back. 4 hour looks like money. Pound to Aussie probably going higher. It's a consolidation. It's near the high. One second. Where's my little kind of a big this is a big messy range is what this is. It's just a consolidation, but it's bullish. That was a good candle, but you're kind of running into some sellers here. 1 second. I mean, we know there's sellers in the market right here. It's right there in the chart. The question is the Aussie and the Kiwi, are the Aussie and the Kiwi going to continue weak? Because the pound is very strong right now, and makes me wonder if this is going to punch through this and go stronger. Actually got a bullish bias on this still. Just we're kind of at a sketchy point here on pound Aussie, pound Kiwi. It was a good morning though. I mean, that was a really good candle. Same thing on pound Kiwi. The Kiwi and the Aussie tend to run together. They almost always make the same moves. A lot of sellers here. CAD yen. We'll take a look at that. Hold on a second. We'll take a look at CAD yen. CAD. It's a tough one because the CAD's kind of coming down right now, but it's stronger than the yen, so it may go back up. You can probably guess that it was going down without even looking at the chart. But it may not stay there. We'll take a look at that in a second. Pound CAD still looks good. Again, the pound is strong. The Canadian dollar's pulling down shortly. It's running into a point where there's probably going to be some sellers here soon. See if that's still there. Looks like it's going up a little bit more. Nothing to do really there. It's a good candle. It's these little muted bullish candles. It's probably going to make a big one soon. My guess is that's going to continue higher on pound CAD. Come on, S&P, dump. Need to go break that low. Be on the way. Pound yen. I mean, what do you say about this? This is one of those that's just, you got to really zoom out to understand how high this actually is. The higher this goes, the worse the risk reward is to buy it. I mean, it's just looking for shorts on this every single day, but today's not the day. It fully recovered and it's going to retest the high. It's bullish. You got a probe high and then a big bullish candle. Got it pulling back. It's just, pound yen's a buy today. I don't see any way around that. It's not a sell. It's just not a sell right now. But it's stupid high. It's so high. It was a good short yesterday. It was a good attempt on a short yesterday, actually. I think it's so high. Just it's still bullish. Still bullish. Pound dollar. The dollar's very uncertain. The dollar's being a turd. I don't know what's going on with the dollar right now. I almost don't even care anymore. It's just, if you look at the dollar on higher time frames, it's garbage. It's not doing anything, and that can be a problem. It's hard to take a directional bias or position when something is not really going in a direction. It's just having extended periods of flat, like the dollar over the US dollar is. The dollar index, which is really its strength measured against the other major currencies. I think it's like 5 major currencies, but if it's not gaining or losing against other currencies, it's hard to trade it. What was that, pound dollar? I mean, right now the pound is bullish and it looks like it's probably going to go higher, but it's right in between a swing high and a swing low, and it's probably not a good idea to do anything either way. Price action wise, it's like, probably look at something else, honestly. Probably going to go up, but I would risk my capital on something that's a little clearer than pound dollar, put it that way. Pound Swiss. This looks bullish. The Swiss franc is definitely losing value. It's losing strength, and the pound is holding. So I mean, this kind of makes sense for this to go up. We're in this earlier, so a little choppy there, but I mean, it looks like it's going to continue higher. Same thing. It's reaching for this range high up here again. That's all there is to it. It's reaching back again for this range high up here at the top. And the pound is holding strong, so there's no reason to sell this. It's only, you're buying pullbacks on this pound Swiss right now. That's it, period. Pound's looking good here. Pound's making a move. NASDAQ doesn't look good, I'll tell you that. I wish this thing would die. Pretty clear range high here. It's rejecting, this just doesn't look good. Obviously that was a bad candle. The problem with this is a lot of times after these big bearish candles like this, that's why I don't sell red candles like that. Unless there's under a controlled circumstance, in a controlled situation. But you get a big candle like that, a lot of times this will just pull all the way back up and then it may reject later and go down. But after a big candle like that, you're probably going to get some kind of a relief rally, even a little bit, and then die. Even if it's going to continue lower, it's probably going to chill out after that kind of a dump. Hopefully it drops. It would make sense for it to go lower. Hopefully it does drop, but we still got 3.5 hours left on this candle, so a lot can happen. It could pull up, make a wick, and then die. It's perfectly normal to get the opposite move after the big dump like that. To get some kind of a pullback for a wick, even if it drops at the end of the candle later. Same situation here. S&P didn't make that big of a move. That's why I took actually the S&P short and not the NASDAQ, is because the NASDAQ already ran early. It already took off. And the S&P hadn't made the move yet. Hopefully this is going to continue lower. It's looking better on lower time frames. We just made a new high the other day. It's one of those things where you got a new all-time high, so hopefully this pulls back significantly. Hopefully. Could be the one. Could be a monster on the line here. Let me actually just reset this. Hold on. We'll make sure this position doesn't close. Hold on. My auto close isn't set to something stupid. All right. That's fine. All right. So yeah, it looks like, it's a short. It's only a short. I would rather be short from higher. It just may, I don't know. I'm watching it on lower time frames. I got this open on another chart, looking like it's about to make a move, about to break that low. Here it goes. S&P shorts looking good. There was your push. That was it. All right, that's what you wanted to see. Looking good. Let's get this show on the road. Let's get this dump going. S&P dump has entered the chat. Let's go. It's going to be a really good trade. The Dow, kind of the same situation. Big nasty bearish candle. Took back everything it made on that previous candle. Everything it gained. Waiting for the equity sell-off. Just waiting. This thing's just flat on the top. It's distributing on the top. Very low volatility. Nothing to do. Dollar CAD, again, it's just ridiculously low. This is crazy low. These are 4 hour, it's a 4 hour chart. Like, this is insanity levels of low on the dollar CAD. It had recently broken a major swing low. Kind of retested the low and held. It's a range right now, but it looks good. It looks like you want to buy pullbacks. Maybe not the screen candle, but when this candle closes, if it pulls back, maybe taking a risk on it. It's just a range on the low, on the bottom, but this kind of thing can make moves. So definitely watching that. I'm already long on this on my personal account on dollar CAD. Waiting for it to play out. I think I was in this like a couple days ago. Got two positions. One's underwater and one's in profit. I'm waiting for this to move up, basically. it has a lot of room to go up. Even if it's going to go up and make a lower high, that's still up. Still watching that. Oil, very high. It's crazy high. This is the problem with the CAD right here, is the oil is at this historically significant level. It's been a high multiple times in the past, going back multiple years. It kind of hit this level and now it's rejected, making a lower high. It's hard to say which way it's going to go. I mean, that was a really nasty candle. It looks like it was a pro blow and it's going to put in some kind of a range here. This looks like it's going to range sideways. Probably going to do this kind of thing. But may not really make it may not make a trending move one way or the other today. I think that dump was it. Ooh, come on, S&P. We need to cut through these buyers right here, and then the thing's going to be gone. It's off to the races. Come on, S&P, dump it, baby. Things looking good. Euro Aussie's bumping. S&P's bumping. Let's go. See what to do here. Same situation. I've got an opportunity to offset this euro yen. Where am I? What do I have on this? Long and short. All right, I'll wait. I'll wait for that to go into profit. Could offset this because I've got this euro Aussie position that's left is in profit about the same amount that this euro yen position is negative. Could just offset that and leave it. Depends on how much more this euro Aussie is going to go. I need to look at that actually. Trying to make a decision on it. Like if euro Aussie's at the point where it may not go much farther, then it may be advantageous. Come on, S&P, there we go. Come on, there we go. Dump it, baby. Dump it. All right, getting the dump we're looking for on the S&P. Anyway, oil, wouldn't expect anything out of it right now. Looking good. Yeah, NASDAQ and S&P both looking really good right now. Yep. Yep. Come on, baby. Dump it. Dump it. Ah, nice. Yep. Yep. Looking good. That's the move you want to see. You want to see it come down right now and push away from that consolidation at the top. You want to push away from that. And now we've got a directional move going. So now everybody just said, oh crap, it's going down. It's not going back up. And now every green candle, they're going to start selling it. Hopefully. Just run this thing. It'll be a race to the bottom, at least for the day. So if we can get back below, actually we're looking to shoot right here. This average would be right at or below this swing low right here. That would be, we're looking for that total. That would be awesome if it would make it down there. We know where our stops are going to be on the way down. Looking really good. Hopefully that continues. There's a lot of room for this to go down. Gold. Back to gold. It's crap. It's nothing. The dollar's really messy chop, and gold is really messy chop right now. It's clearly correlating with the dollar right now. People probably just don't know what to do. Overall, structure-wise, it's pretty low. I actually like gold where it is. I think it's a good. I think it's a good opportunity to rotate things that are in profit, like the S&P, like equities, all the stocks that are in profit by a lot. I would watch gold. It might be a good time to rotate into something that's low, like gold. It's low. Maybe not historically, but it's low regionally, like in its local price action over the last couple months. This has come down a lot. Like it had almost a 20% drop. And it came back into a consolidation. Like it's pretty low right now. It's actually an attractive vehicle to rotate some profits into. So I would watch that over the next little bit, next couple weeks. Or if the stock market starts selling off, would watch the dollar, the yen, and gold, 100%. Right now it looks bearish. Might just have a risk sell off today. Looks like risk is selling off, including gold. I would watch Bitcoin too. Bitcoin may get some downside pressure on it as people start lightening up on the things that are they're in profit a lot. It's one of the biggest risks to Bitcoin right now is the stock market, because it's been trading with the stock market as a speculative investment. It's pretty much just what it doesn't even move on the weekends anymore. It just trades during the week with equities. And when risks start selling off like stocks and gold and oil, Bitcoin tends to run with that during the panic times, during the panic sells. Just the way it is. It's the way it's been lately. So I would watch that. Come on, S&P. Got a good short on here. Might have caught a monster on that. Let's go. I'm gonna leave that one on. Looks good. So yeah, I'll probably watch Bitcoin too. Just because of that, because it's something that's up. When people start getting margin calls and start to say, crap, they might have bought something a little too high in the stock market. And then when that starts going under, they start looking at their portfolio and saying, what can I offload? What can I dump that's in profit to offset that? Same thing we were just talking about. You're looking for something that's in profit because you're taking a loss on something else. When the stock market starts getting smoked, first thing to go is Bitcoin. It's the number one top thing on the list. Number one. Because it's had such a big move and people are so far in profit on this. It's the first thing to go. So it starts selling off with everything else. They start dumping everything and going back to cash. You see a big run on the dollar and a big run on the yen. So that's why stuff like pound yen, euro yen, pound dollar, euro dollar, they're going to die with the stock market because you're getting the opposite move. Everybody's going back to cash, specifically the yen and the dollar, because of the way the borrowing at an institutional level works with the rates. They look to rotate that profit into something, and if it's not going to be gold, if gold is selling off with it, going to watch the run on the dollar, watch the run on the yen, and yeah, see if we can make some money on that. Hopefully everything will start kicking off here. If we can get a real sell-off going in equities, that'd be gangster. Means we're going to make some money this week. Because that'll set some things, that'll definitely set up the yen and the dollar trades. The dollar needs to move. It's been flat for so long. And that's actually interesting because it's been flat. You know, a lot of times after a tight consolidation like that, you get a big release one way or the other. And it's definitely primed to do that. It's tightened up that coil. It's coiled up and it's ready to release. It's ready to spring out of there. So we'll see. Maybe an equity sell-off will kick that off. Pretty big recovery there. Just a bounce. It makes sense though where that happened. No, let's see. Bro, what are people buying in the Dow? You got the NASDAQ and the S&P getting absolutely murdered and the Dow's flying. I bet it's Boeing. Gotta be. Yep, look at Boeing. Okay, so we got markets open. I like to look at the individual names on that. That's why I don't mess with the Dow much. It's too subject to an individual company because there's only 30 companies versus 500 companies in the S&P. So you get a much better analog for the entire market and a much better average with the S&P 500 because there's 500 companies versus 30 companies in the Dow. So if one company has a big day, it makes a much larger impact on the overall index price. So that's why I always watch what individual names are in the Dow. Boeing is one that moves it a lot. It's a good barometer. First thing you go look at is Boeing. Where are we? Let's see if this is going to go or not. So anyway, it's kind of the oh yeah, CAD yen. We'll take a look at that. Take a look at CAD yen real quick. Why not? Doesn't look good. Again, it's been really flat. It looks bearish to me. This structurally looks bearish. Looks like it's going to go down. Looking at the 1 hour. God, the thing's high. Again, the CAD, I mean, Canadian dollar is just crazy. It's very high. It looks like it's in a range. It's kind of tight, but my guess would be that that's going to go down. The problem is it's already dumped a little bit today. Actually got an inverted 3-line strike on CAD yen. It's interesting price action. Hold on. So this on the other side. At the 1 hour. I mean, we talk about this a lot. This price action, how a range forms, and looking for the measured move back down. So you got the big dump candle here, and then you had the multi-candle grind back up to the open. A lot of times you get that measured move drop back to define the boundaries of this range. Same thing, I say it just happened on CAD yen. This is a very common type of price action. Happens both ways, to the upside and the downside. But yeah, right here, this is a range. It's a consolidation below a previous consolidation, which is very bearish, structurally bearish. It's a range below the range on the high. It's not generally a good thing. Ideally, you would want to take this short. Maybe not from here, but if you could get a little bit of a pullback maybe, and try to get back down to somewhere in here, at least, you know, before it pulls back up. But this kind of thing is bearish, where you get a consolidation, a range consolidation. It's more of a distribution on the high. You're just getting a lot of profit distribution from everybody who was long in here and in here, and everybody who's long this whole time, or they're distributing profits here. That's why it's not going up anymore. It's got people buying. They're getting bag transfers is what this is. All the smart money who bought way down here is transferring their bags. They're transferring their bags to the people who are buying up here over the last like week or so. And that's kind of what it looks like now that we can see this going flat like this. It's kind of a distribution on the high. And we're dropped back down and consolidating below this consolidation on the top, which is really a distribution of profits. It's profit taking, really. It's not really a good look. It looks like you're going to run out of people who are willing to buy up here because this is very high. Eventually everybody's going to pick up on it and say, look, that's too high, and it's not going up, and people have been selling into it the whole time, and then it's going to dump. But it hasn't, you know, that kind of was the drop. You probably don't want to sell it now. It's interesting though, price action wise. It looks like it's going to pull down a little bit. It just may not be the right entry. Let me take a look on another chart. Hold on. Oh, I'm already on it. Quick, see measurement wise where it is. Yeah. It may not be the best entry short, but my guess is that's going to continue lower. There's a lot of room to the downside. I'd rather be short than long, but it's risky here because it did just make a higher low. I don't know. I would not mess with it right now. It could go up a little bit, but overall it's really risky to be buying it because it's so high and it's in a distribution. Yeah, I don't know. It's not bad. I mean, we'll watch it right now. I think the CAD and the yen are kind of going the same direction. Yeah, they're kind of close to each other. It's probably no trade on that as far as entries go. No trade. P. What's up with this? See if this holds or not. Maybe. See if this is going to be a range and continue later. Got buyers here for sure. If that holds as a range and not a high. See if this is going to be the high of the day or if it's just going to be a range and continue higher, because there's room on this to go higher. There's definitely room on it. Right now, there's no reason to sell it really right now. Man, come on, S&P. Bruh. What was that? That was whack. Wow, it came all the way back. Interesting. So the NASDAQ, see the Dow though? Dow was pumping. So there's something in the Dow that's holding this up. There's some individual names that are moving higher, but the broader market is not moving higher. There's some individual names that are kind of holding everything up. Interesting. I don't know. We'll watch this for a minute, see what happens here. I don't know. I mean, that would be a weird low of the day if this holds. It's a weird price action. I mean, it makes sense for it to bounce there, but to come all the way back, that harsh, that big of a move all the way back, it's a little funky. So I don't know. We'll see what happens at the top of this range. Back in. It's weird. Anyway, hold on one second. Let me go grab a drink. Be right back. We'll continue this on, see if we can find some pips. Give me just a minute. All right, let's get back to what we're doing here. Hold on. Still no direction on the dollar. It's just back up and down, up and down. And back and forth, pound yen's back and forth. Still like pound yen, it's just rangy. Nothing right now. And it's S&P's all over the place. That's kind of funny, actually. It's everywhere. The heck is that? Man, euro yen, same thing. Just flew all the way back up. Big hard bounce. Looking good. I don't know about Euro Aussie. Maybe. The yen's doing pound yen, euro yen. Kind of coming back. It's choppy today. We're going to do the best we can. It's the only thing we can do. Euro pairs look like they're trying to come back a little bit. Pound Kiwi still looks good. Trying to move up. Pound Swiss still looks fine. Whoops. Still looks good. Like more up movement there. See. I'm gonna take a small little pullback on pound Swiss just because of where it is. Swiss is weak, just in case. Nothing big, small. Pound Swiss. Got that big bullish candle and it held. It held. Got a big bullish candle. I'm just gonna take a pullback and just in case it goes. Not big enough to hurt me. But any little bit will make a difference at this point. Your Aussie's still hanging in there. Still possible. I'm gonna watch this one. Not over yet. Could just still be a range. What's that? Something about Euro Aussie.
Yeah.
I had that trade on YouTube. We're looking at just still watching this. Euro Aussie still good. Euro Kiwi. Aussie and the Kiwi have been weak. Makes sense. Pound is holding strong. It's just not really moving anywhere, but it's holding. The Kiwi, New Zealand dollar, is getting killed. The Swiss franc just rolled over again. Smoke another Swiss. Smoke another Swiss franc. Get smacked down here. It's like a euro. Euro's still good. Dollar is actually moving up. Stupid as that is, it's back. It's in a range, but it's moving up again. Problem is everything else is the dollar's not really moving because the euro is moving with it. Even though the dollar's strong, the euro is also strong and it holds such a heavy weighting at 57% of the dollar index. You know what I mean? There's talk about again the relative volatility conversation that we have all the time. There's not much there's no relative volatility between the euro and the dollar, and when the euro holds such a heavy percentage of the dollar index, it's just not moving. You go look at even though the dollar is strong overall, it's really the Swiss probably that's hurting it. You go look at euro or go look at the dollar index. It's not really doing anything. It's going sideways. It's back and forth. even though it's gaining strength, the euro is also gaining strength. So it's like kind of holding the dollar index in place. But the dollar itself is stronger. Swiss is getting killed. Pound Swiss is money. Pullback's going to be good on pound Swiss probably. Euro Aussie's still moving. Euro Kiwis probably ended up being the better trade. Still holding a range. It moved earlier, but it may continue. This still looks like this has got room to go. Not even halfway. Hasn't, you know, it's just on the way. It's very likely going to end up there. This is probably just another higher low, just to make one more. I'm just looking for that one little push. It's like 20 pips from here on Euro Aussie. That one little push. TP1. Oh, Kiwi. Dang, Euro CAD. CAD's a little weird. Euro Yen actually looks okay. That's a really good candle on Euro Yen to just hold it. It's again a just consolidation above a consolidation. Looks good. It held the range, so that was a good candle. So any pullbacks at all, you're looking to try to get that higher, even if it makes a lower high. Probably, you know, just a little bit of a move. It's probably got another 20 something pips on it left. We'll monitor levels on the way up. The S&P to die. I've just kind of got a mixed bag on right now. Wait and see if Euro Yen's gonna go. Actually may take off, yeah. We'll wait and see if that's gonna go. If this goes higher, then that'll be fine. Because I've got a sell and a buy on Euro Yen. That's from way earlier this morning. So I'm waiting for the buy go into profit, and I'll knock that out. Whatever on that. Doesn't really mean anything yet. I'm watching other stuff. S&P's running. Finally. Let's go. Dump it. Euro Aussie's still good. I just kind of got a mixed bag on pound yen. I'm long pound yen. I still like pound yen. I've got a lower entry. I'm looking to take. I just wanted to go a little bit higher. Knock off my higher entry at break even and then take profit on the lower entry if it'll go up a little bit. Getting a lot of movement here. No trending move anywhere. I mean, just trying to work it back and forth at this point. There's not really anything happening. Look at the dollar. Nothing. Equities moved. That's actually true. Okay, gold kind of showing some dump here maybe. You'd be selling green candles on gold maybe. Take a look at that in a minute. Oil's just back. Okay. Tagged previous level. Back up. And there. Dollar CAD still bullish. Still, I'm long on this in my personal account on dollar CAD. Just waiting. It's just a longer term position. See if it's going to go. It's in profit. It's waiting. Open that all up. What's up? Dude, messing with it on my phone. I think it's up like $30. This is interesting. Whatever that was on the Dow. God, look at this S&P. What is this doing, man? It's just impossible to trade that. Impossible. I mean, what the heck is that? Come on, bro. Man, it's whack. Ridiculous, honestly. I don't know, we'll watch it and see. It's just, I don't know. I mean, there's nothing you can do about that kind of stuff. It's just death.
That's whack, baby. That's great.
This is his death candles here. I don't know what that is. Taking everybody out. Man, that's crazy. It's gonna stay. I'm just gonna hold what I've got and just wait.
Do you have it at break even?
I actually don't have a stop on this one. I'm watching it, but at the same, I mean, just for learning purposes or just for example purposes, I've just got to stop and say, look, this is my point where mentally I'm like, okay, this is not, if it's wrong, if it comes back into range, you know what I mean? Like if this does come back into range and starts coming up here and holding, then I don't want to be in it anymore. You know, it's just, if it comes back in and it's going to hold this, I don't want to be in the short anymore. And I've just got it on there. I should have a stop on it, but technically don't have a stop on it, but it's more of a mental stop on this one. I'm watching it. I'm kind of using this equity to hold something else. Waiting to see if you're again.
GA from yesterday?
No, I'm closed out of everything from yesterday.
Okay. It's almost hitting take profit. Yeah.
Yeah, GA. Actually in this still. I think might still have a position on this. I think I still have a small piece on. I thought I was. Yeah, pound. Yeah, I just got a little tiny piece on. It's actually at 0 right now. I had a little piece on GA and GN at the same time. I thought earlier. It just hasn't really done anything. But I was in it earlier. Yeah, I was looking for this to potentially go higher today. It's just not really doing it yet.
I'm on a weird position because I'm long on GA and some pendings of mine on GJ were taken short. So I'm short on one and long on the other. Let's see.
Yeah, it depends on which way it goes. I mean, they can both play out. Yeah, I'm trying to figure out pound yen. This was a good short yesterday, but it's come back. Like this came all the way back up. I don't know what's going on with this. Right now, it's just not doing anything.
I'm in profit on both of them. You see that wick on top? Yeah. I got it almost.
Oh, right here. Yeah.
I had my pendings on like
nice
stuff.
Yeah, it's just kind of going back and forth. I don't know what's going on with this. Higher time frames. It looked like it was a good short yesterday. This was it looked like it was. Sorry, hiccuping. It looks like it was going to go, but it came back today. So overnight, really. I don't know what's up with that. I mean, I'm just watching it. Just waiting to see if it's going to make a lower high. Pound dollar's not doing anything. We got FOMC today, so whenever Powell's going to speak, it's probably going to be boring. It's just kind of what's going on today. We got a boring day going on. A lot of people don't really know what to do with their money or don't want to make a decision when Powell's going to speak because nobody knows what he's going to say. We got a rates decision today, but at the same time that it's going to be unchanged, but just waiting for the volatility. It's later though. It's at 2 p.m. It's 4 hours from now. So we're just kind of wading through the chop here, wading through the swamp, waiting, different waiting, WADING and WAITING at the same, WAITING. Waiting and wading through the mess. Pound yen, pound dollar. I don't know. The euro is still strong, the dollar is still strong, and the pound is still strong. Everything's going up. And until that changes, there's not really going to be a lot of movement. There's not really, I doubt there's going to be anything that's actually trending. Euro Swiss is probably making a good move. One of the few things that looks like it's actually doing something. Yeah, actually made a trending move, but that's, it's not a lot of volatility there. I don't know. I'm just waiting to see what's up with the equities market, waiting to see what the S&P is going to do. The dollar's not doing anything. It's going back and forth. There's been no movement, little tiny range. Barely done anything. It's a little tiny range back and forth. It looks like it's moving, but it's not. These candles are small. These are really small candles historically, but it's just nothing. Like it's waiting Euro Aussie. It's waiting to see what's going to happen. Still short now. S&P. I wish I would have caught the NASDAQ short earlier, but it's just this thing's all over the place. All right, well, that's actually interesting on the NASDAQ, what that just did. Got a potential low. Oh, man, I don't know. I hope this all goes back down. I was really hoping these things were going to go down today. And I don't know, it's just kind of holding right now. Stupid candles. Really choppy market. Just going to do the best we can. Lower risk. Try to be bullish on your account balance today. Bearish on chop, bullish on discipline. Just try not to take too big of a position size and get in something that's going to hurt. On Swiss is doing good. On Swiss is in profit. This still looks good. Swiss franc's very weak. Pound still holding. Dollar Swiss is probably doing the same thing. Euro Swiss. CAD. Swiss. Aussie's picking back up. What's up with that? Problem is nothing's going down. Everything's going the same direction. It's up. Everything's going up with the Swiss franc. The heck, man. It's choppy. Everything's going the same direction. Just like earlier, everything was going down. Now everything's going up. The whole market is in sync right now, and it's just a big choppy garbage mess. Big mess. All right, well. Wrecked on Euro Aussie. Worth a shot. Man. So good. Let it go for now. Close to a point where it's probably going to bounce. It's going to let it go. Previous. Lower. Yeah, just take the break even stop on it. If it makes it back, then I'll just take the stop. It was worth a shot. Next trade. On Swiss is still bullish. Aussie and the Kiwi are pulling back up. That's what's going on. They're gaining strength a little bit. Short term. Still weak overall, but short-term gainers. Messing up the trade. Going to be a big range. It's going to come back and stop it out and then go back up. Wrecked. It was worth a shot though. Next trade. Wait and see what happens with it. Euro yen still looks really good. Pound yen still looks good. I'm long pound yen for the last couple hours probably. Still. Euro yen, pound yen both. Waiting for it to move. 1 hour, 4 hour look good on pound yen. Euro yen too. Same thing. Euro yen looks really good. Euro yen might actually be the better trade. The yen is potentially rolling over. Possible lower high scenario here on Euro yen, or on the yen index. And it's going to lose strength. Something that's fresh, like the euro. CAD yen maybe going back up. I don't really trust the CAD. Pound's holding. If the pound moves up at all, pound yen's going to go. Especially with this pointing toward the downside again. Possible lower high. With an overall direction to the downside on higher time frames. You know, just betting against the yen. Swiss is getting killed. Dollars all over the place. There's just, yeah, it's just choppy, guys. That's It's all good though. Kind of knew this was going to happen. It's pretty standard stuff. Our pal's going to get on and open his big mouth. Everybody waits. Dollar's not doing anything at all but blowing accounts. The thing the dollar's doing today is blowing accounts. Euro dollar actually looks good. Looks like it's going to, I mean, there's plenty of room higher. There's no reason to sell it. See if this holds and take a pullback. Maybe the dollar's going to come down. Again, you just got to be careful because we got interest rates today. And there's going to be volatility. It's going to be unchanged, but it's going to be very volatile, especially for the dollar. I would watch gold, watch the equities market because of where it is. See gold, big troll candle all the way back up. It's garbage. Stuff's hard to trade. Just big, messy, multi-day consolidation. Thing. All right. I don't know. See if this rolls over or holds or what on the S&P. It was worth a shot. Man, that could have been a good one. Stopped. Good game. Just still crap. Like, that's not bullish. It's not bullish. It's just garbage. It's just sideways chop. But, I mean, to wait and see what it does. It doesn't look good. It looks like a consolidation, but consolidating in a downward move. It's already dropped, consolidate, drop, consolidate. Nothing. Like, there's really no bias directionally here. It's going sideways. But that doesn't mean you give up. You keep trying. You keep trying until you get it right. Until you get the direction. Dollar, same thing. I mean, it's a garbage market, period. It's nothing we're doing wrong. It's just thing to do is just manage the risk. Try to stay out of the mess if you can. Try to find something that's not as choppy. And it's just difficult. Eurocat earlier. I had a good position on this earlier. I'm still long on this actually on my personal account. Still looking good. Looking much better. Maybe. Come on back. Euro dollar still okay. Euro yen still okay. It's just slow. It's a slow, grindy move to the upside. But it's probably got some room. Probably got a little bit of room left. I don't know. Let's just watch it for a minute. Oh, I hear the dinosaurs. Crazy things, man. These sandhill cranes here. They're everywhere in our neighborhood. They walk around in the backyard and in the driveway. They're like bigger than like a child. Like it's like a size of a small human. These things are nuts how big they are. It's like a velociraptor. It's like what's left of the dinosaurs. Seriously, it's nuts how big they are. I think I could grab my dog and fly away with it easily. Easily pick up the dog and fly away with it. No problem. They're huge. Find one standing next to a human. They're everywhere. I hear them. They walk around in the neighborhood and they pick down in the grass for bugs. They go and fly. There'll be like 3 or 4 of them at a time. And they're big. They're like, a lot of people are scared of them. I'm not scared of them. My girl's scared to death. Like, you open the door and there's like this thing, this monster dinosaur stands like a velociraptor standing in the yard. Crazy. If there's a picture next to a human. Yeah, these things are huge. Yeah, they get like human sized. They're big, like for real. Like the adults are huge. There's one walking across the road. Yeah, they're everywhere in the neighborhood though. Those are small ones. I wonder if there's anyone that are biggest bird I've ever seen, like just in the wild. And they fly too. They'll fly. I'm always worried that they're gonna swoop down, like grab a dog or something. It's nuts. Things are big. But yeah, they're everywhere here. They're all in our neighborhood. They're everywhere. I hear them all day. They're always walking through the yard. Especially early in the morning, like right as the sun's coming up, they'll be walking through the yard. They go through everybody's yard and just pick for bugs. They pick into the grass. And they're huge. They're like, some of them are like human size. Yeah, that's pretty crazy anyway. I was gonna say there are things. I just heard one. Next to a human.
Didn't the meteorites wreck those things?
Let's say, man.
That's huge.
Yeah, they're big. I was just saying, I just heard one outside. Try to take a picture next time. There's people standing next to him. I'll try to take a picture next time. But yeah, they walk through the yard. They'll go in groups of like 3 or 4. They'll fly. They'll just swoop out of nowhere and land in the yard. It's like a freaking helicopter landing in the yard. Anyway, they're everywhere, like in the wild here in Tampa, like in this, especially in this neighborhood. Come on, S&P, man, that's what a turd. Perfect. Garbage. My entry is actually a little higher than that. It must have been where I got in and marked it. Man, yeah, everything's ranging and chopping and coming back. I don't know what this is on the S&P. It was worth a shot. Worth a shot. I don't know what that mess is. It was all over the place, but it was worth a shot. I had the right idea on it. It's one of those days. I mean, look at the dollar. It's nothing. There's nothing here. Garbage. Hot garbage. No, just still watch. Or Kiwi or Aussie coming back down. There's no finish. There's no follow through. Didn't even go halfway. And it's just, you got to keep trying though. You always got to keep trying and get in the move that stays. If you can get in a move that early enough and catch the majority of that daily candle. That's the whole goal here, is to try to catch them as much of the daily candle as you can. And that's, you just got to at least try. But when you're getting these little dojis and garbage little tiny daily candles, it's nothing you can do about it. Can't quit. You got to keep trying. You get 1 or 2 good days a week and manage the risk on the rest of it until the market goes back to normal, till we get back in a trending environment. It's all good though. You do the best you can. Just try not to lose a bunch of money is the thing. During these times when the market is really choppy and rangy, the best thing you can do is just try not to lose it all. Taking big positions is probably not the right thing to do right now. Problem is, I've got to pass this stupid thing. I don't know now. I'm gonna end up not hitting the profit target because I can't get the freaking market to move. God. Correct. Bull schnazzle. Well, I don't know. Still got all day. I mean, we got another 4 hours before Powell comes on. Evans Gold's back in the range, but again, it's just exactly that. It's back in the range. It's back in a choppy range, mess, garbage. Nothing. There's no trending move here. It's just wrecked, over and over and over, knocking everybody out. Every time you try to jump on a trend, it just goes back the other way. Just range trading right now is the only thing we can do. Trying from the highs and the lows. Garbage. Gotta keep going. That doesn't mean you quit. Not fun. It's definitely frustrating. It is definitely frustrating, but you gotta keep trying. Euro Aussie. It's actually holding. Come on, Euro Aussie. Hold that range, man. See us hold a range and go back up. There's such a good opportunity here on this. Aussie to roll over. Crap. I don't know, guys. Let's just wait. Euro pound. Don't even want to touch that. It's just too risky. Don't even want to look at that. Pound yen looked like it was going to be good. Now it's rolling over. The heck, man. Euro yen still okay. Euro yen actually looks fine. Euro dollar looks fine. Looks bullish, honestly. Euro dollar and euro yen look fine. The only things in profit is pound yen, euro dollar, and euro yen. Ooh, what happened to the S&P? Dumped again. All right. Watched all of a sudden that was at neutral and then it slammed back into profit. Man. Just watch this for a minute. It's 10:30. It's getting a little late. Kind of riding the waves back and forth. We'll see what we can get. There's really nothing. There's really nothing that's trending other than the euro. The problem is there's nothing else that's moving. The euro's moving around other things, and it's not really the best entries, I guess. There's not really much of a move. The euro's gaining strength, but the problem is everything else is just kind of going flat and chopping around. There's not really anything happening. Everything's moving in unison. The euro is the biggest, probably the biggest trending move of the day. It is. You know, I mean, if you look at what's actually happened this morning, the euro has consistently gained. And that's about it. Everything else is, you know, looking back here about 3 o'clock in the morning, right here is about this is your 3 a.m. candle right here. Actually right here. So what's happened? The pound has gone nowhere. It's flat. The CAD lost a little bit of strength and now it's pulling back up. It's flat over the last hour or so. The Swiss franc has lost a little bit. So there's your two big movers. You had an up move in the euro and a little bit of a down move in the Swiss franc. The yen completely flat. And this is, you know, basically open of London this morning. London go time. Flat on the yen, nothing. It's the same price it was. It has not gained. It is not appreciated or depreciated in value since London. Aussie and the Kiwi, same story. It's just slowly waving back and forth. It started to lose a little bit. Now it's taking it back. Nothing. The only thing that's actually happened is the euro's gained and the Swiss franc has lost. And other than that, everything's relatively flat. Had a little bit of a loss in the CAD. The dollar's about the same. It's moved up a little bit and then went flat. And over the last couple hours, everything is flat. Pound's flat, dollar's flat, the CAD's flat. The euro is gaining. It's the one thing that's happened is the euro is actually gaining. The yen is definitely flat. The yen's the worst. The yen is the worst offender by far. Swiss franc has lost a little bit. We've already gone over that. The euro and the Swiss franc have been the two kind of outliers today. But then the Aussie and the Kiwi pretty much flat too. were coming down. Now they're going back up. They haven't really moved very much. As far as movement goes, the euro has made the biggest move. Swiss franc has made the second biggest move to the downside, but it's not really. So euro Swiss was probably your best trade. Euro Swiss was probably the best move. In hindsight, looking back at it now, without even looking at the chart, I mean, it was probably the best trending move. Yeah, obviously. So, other than Euro Swiss, the market's been kind of garbage, like over time too, not just, you know, over time, you know, just really flat. Like, look at the pound, it really hasn't done anything. Dollar, you know, over the last couple hours, especially the last 3 to 4 hours, everything's flat. You know, like I said, the euro is the gainer today. It's normally flat. It's actually been gaining. Doing the best we can. Gold's all over the place. I don't know what that was. That was a weird move. Oil, same thing. Oil kind of got the same move. The S&P equities got the same move. Looks like risk, just risk in general, is all over the place. Bitcoin, same move. Dump, slam back up. Same thing. Yen's flat. Pound's flat. The dollar's flat. CAD's pretty flat. The Aussie and the Kiwi are pretty flat. Got it again gaining on the euro, but the problem is it's already been gaining for so long that you run a risk of a pullback, going into a pullback phase where you start losing strength for a couple hours, even if it's trending to the upside over time. Garbage. Wait, I mean, same thing. NASDAQ's coming back up. Got a green candle on the NASDAQ and a red candle on the S&P. That about. Red candle on the Dow. Tech pump. Yeah, got a big green candle on the NASDAQ and a big red candle on the S&P. Oh. Watch this for a minute. I don't know, we'll just stick on it. We know we got Powell coming. We'll listen to it and try to figure out what he's talking about. He actually hit the market with some weird stuff last time. He hinted at inflation for the first time, which was kind of weird. That was kind of an important, last time he spoke, that was important. It's the first time he said anything like that lately. He hinted at inflation coming. And he hinted at, he said, what was it? About asset purchase. He says they were tapering off asset purchases. That's a big statement. He said, you know, he kind of slipped that in there last time, talking about tapering off asset purchases, basically saying we're not buying anymore. The Fed floor is not here anymore. We're not buying all of these assets to keep this stuff up. We're not buying all these ETFs and corporate bonds and all this crap. Municipal bonds. We're not holding it up anymore. That's what he said. We're going to stop buying, which means they're selling. Means they've already bought it all, so now they got to sell some. So it makes you wonder what's going to happen. Things still at a new all-time high yesterday. So who knows? I mean, see what he says today. Some serious risk in the market right now. With this on a new all-time high like that, it's already sketchy. I don't know. We'll see what Powell has to say. We know there's going to be volatility on the rates. At least in the dollar, probably gold, probably the equities market, though all the yen, everything will probably start moving at 2. It'll probably come on at like 2:30, I think. He normally waits like 30 minutes. They let the market settle down from the rates release. And then, yeah, 2:30, normally like 30 minutes later. Yeah, okay, 2:30, yeah, 2:30 press conference. It'll be Powell saying something, telling us about his tools. There's still a lot of systemic risk due to the pandemic, and we're using all available tools. Basically all he's going to say. See if he says anything weird like last time. Kind of raised everybody's ears, perked up when he said they're going to taper off asset purchases, and he hinted at inflation into the future. So, I mean, let's see Eurowasi never got stopped out. Yeah, Fedcoin. I was gonna say, they've been talking about that a lot lately. They've been talking a lot about Fedcoin lately. It's noticeable. It's noticeable how much that's been in the conversation. They're serious. Yeah, gold is whack, man. Yeah, gold is whack lately. The last 3 days have just been complete trash. It's just sideways chop. If you look at the last 3 days, look at the 4 hour on gold. It's just dirt McGirt. Absolutely just dirty tricks everywhere. It's terrible. It's horrible, man. That 4 hour on gold is pretty bad. EuroCAD was pretty bad the other day too. Yeah, gold's the turd chart of the day right now. Turd of the week. Definitely the turd chart of the week. EuroCAD was pretty bad. Now it's moving a little bit. It was bad yesterday. Or the day 2 days ago, it was just nothing but sideways, tiny little candles. Finally moved a little bit today. Yesterday was bad. The day before it was bad. But yeah, gold is crowned king turd today. Come on, S&P, let's do this dump. Let's get it on. Come on, baby. Dump on. Get the dump reinstated. Yeah, gold's pretty bad. If you look at the 4 hour, it's disheartening. That honestly is trying to stay out of it right now. In and out. Hard. It's hard to trade. A lot of it has to do with the dollar. If you look at the dollar, it's the same thing. The dollar and gold are basically making the same type of garbage. Two garbage bags at the same dump. Gold and the dollar. See what Powell has to say today. Fix it. Maybe he's got the right tool for the job. Maybe Fedcoin to the rescue. Eurowasi's looking a little better here. I don't know. Let's hold on a second. Let's watch S&P for a minute. I'm gonna grab something to eat real quick. I'll be right back. Be right back, and we'll finish this day on. There's nothing to do. Hopefully this dumps. Come on, S&P. Come on, Eurowasi. Give me just a minute. Be right back. Let's go. Come on, S&P. Dump it, baby. Let's go. Looking good. Finally. Need that to run. Come on. Looking good. That just hit 2 standard deviations on the S&P, so this may start to slow down a little bit. Or, well, 1 full, but hopefully this continues to dump. Got a little bit more to go. Come on, man. Hopefully this will go. Euro Aussie's running good too. Looking better. Euro Aussie's looking good. Come on. Back in the game here. Give me just a minute. I'm trying to eat something here. Just kind of watching right now. Waiting to see if there's anything that's going to be safe. Just sticking with what we got. Basically. I'm eating something. I'm trying to hurry up. Euro Aussie, if anybody happens to be in this, just shout out. Not shout out, but public service announcement. If you happen to be in this, probably a good idea to start looking to take profit pretty soon on this. There's probably going to be some kind of a pullback on Euro Aussie. Euro Kiwi, same thing. It's a good move, but it's running into gonna start running into an issue here pretty soon. If anybody happens to be in this long, I'm actually about to take some profit on mine when it gets up a little bit more. Right about where this is, you want to start looking to take profit. Nothing wrong with taking profit. 54419. Lower. Something like that. Right about where it is. Probably a good idea to start taking a little bit of profit. Good trade. And hope that it continues a little farther. Either that or maybe move your stop up a little bit. I generally tend to scale out a little bit and then just let it go. I'm gonna take some profit. Actually, I'm gonna use that to offset. I've got a mess on whatever this is, pound Swiss. I'm gonna take that profit and offset it. I'm gonna remove that pound Swiss from the board and take the profit on Euro Aussie to offset that. I've still got Euro Kiwi on. I offset my Euro Yen problem with that. I've got Euro Yen in profit. It's close. Take the $22 on Euro Kiwi and the $28. Take a $6 loss on Euro Yen instead of a $28 loss. That leaves me with the S&P short that's still running in profit. I've got one position on pound yen that's a problem, but it's not as big of a problem, and I'll wait and see what another thing I could do is take man, I don't know if I want to leave that S&P short on or not. I think this is probably going to go a little more. I want to leave it on. I'm going to leave this. So yeah, I'm knocking out profit and at the same time being able to keep everything that I've, I'm scalping out little trades and trying to keep this about zero. And when I eventually knock all this off, then I'll still be gaining on the little positions, and then I'll knock all that risk off. Kind of the idea. Just trying to keep it about break even. Trying to hold a delta neutral position, keep it run a break even strategy, but then be able to scalp off of the edges. Yeah. Come on, S&P, dump it. Let's go. Been good. Give me just a minute. I'm still eating, but Euro Aussie, again, it's a good idea to probably take a little bit of profit right here. At least the best thing to do would be to like take half down and make sure you got to stop at break even. And if it runs, it's good. If it goes and breaks the high today, that's a bonus. Or whatever, whatever split you want, but it's generally what I'll do. I'll take like half down and then move my stop to break even, just let it go. And if it comes back to break even, then whatever. But it's probably going to have a reaction here pretty soon and pull back. So just be aware of that. This is the right place to take profit. Give me just a minute.
Flawless victory. Headshot.
Bitcoins is the shit, my nigga. body! Bruh. Ha! Got him!
everyone. Our country is in serious trouble. I beat China all the time. We don't beat China in trade. Trump. We don't beat China in trade. Trump. We don't beat China in trade. Trump.
Good afternoon. I would like to start by noting that it has been a full year since the pandemic arrived with force on our shores. Looking back, it was clear that addressing a fast-moving global pandemic would be plainly and primarily the realm of healthcare providers and experts. and we are grateful to them and to all the essential workers for their service and sacrifice. The danger to the U.S. economy was also clear.
Trump.
Congress provided by far the fastest and largest response to any post-war economic downturn,
Trump.
offering fiscal support for households, businesses, healthcare providers, and state and local governments. Here at the Federal Reserve, we rapidly deployed our full range of tools to provide relief and stability, to ensure that the recovery will be as strong as possible, and to limit lasting damage to the economy. We are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. The economic fallout has been real and widespread, but with the benefit of perspective, we can say that some of the very worst economic outcomes have been avoided by swift and forceful action from Congress, from across government, and in cities and towns across the country. More people held on to their jobs, more businesses kept their doors open, and more incomes were saved as a result of these swift and forceful policy actions. And while we welcome these positive developments, no one should be complacent. At the Fed, we will continue to provide the economy the support that it needs for as long as it takes. Today, the FOMC kept interest rates near zero and maintained our sizable asset purchases. These measures, along with our strong guidance on interest rates and on our balance sheet, will ensure that monetary policy will continue to deliver powerful support to the economy until the recovery is complete. The path of the economy continues to depend significantly on the course of the virus and the measures undertaken to control its spread. Since January, the number of new cases, hospitalizations, and deaths has fallen, and ongoing vaccinations offer hope for a return to more normal conditions later this year. In the meantime, continued observance of social distancing measures and wearing masks will help us reach that goal as soon as possible. The economic recovery remains uneven and far from complete, and the path ahead remains uncertain. Following the moderation in the pace of the recovery that began toward the end of last year, indicators of economic activity and employment have turned up recently, although the sectors of the economy most adversely affected by the resurgence of the virus and by greater social distancing remain weak. Household spending on goods has risen notably so far this year. In contrast, household spending on services remains low, especially in services that typically require people to gather closely, including travel and hospitality. The housing sector has more than fully recovered from the downturn, while business investment and manufacturing production have also picked up. The overall recovery in economic activity since last spring is due importantly to unprecedented fiscal and monetary policy actions, which have provided essential support to households, businesses, and communities. The recovery has progressed more quickly than generally expected, and forecasts from FOMC participants for economic growth this year have been revised up notably since our December summary of economic projections. In commenting on the stronger outlook, participants noted progress on vaccinations, as well as recent fiscal policy. As with overall economic activity, conditions in the labor market have turned up recently. Employment rose by 379,000 in February, as the leisure and hospitality sector recouped about 2/3 of the jobs that were lost in December and January. Nonetheless, employment in this sector is more than 3 million below its level at the onset of the pandemic. For the economy as a whole, employment is 9.5 million below its pre-pandemic level. The unemployment rate remains elevated at 6.2% in February.
Don't believe the 5.6.
This figure understates the shortfall in employment, particularly as participation in the labor market remains notably below pre-pandemic levels. Looking ahead, FOMC participants project the unemployment rate to continue to decline. The median projection is 4.5% at the end of this year and moves down to 3.5% by the end of 2023. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been the hardest hit. In particular, the high level of joblessness has been especially severe for lower-wage workers in the service sector and for African Americans and Hispanics. The economic dislocation has upended many lives and created great uncertainty about the future. Overall inflation remains below our 2% longer-run objective. Over the next few months, 12-month measures of inflation will move up as the very low readings from March and April of last year fall out of the calculation. Beyond these base effects, we could also see upward pressure on prices if spending rebounds quickly as the economy continues to reopen, particularly if supply bottlenecks limit how quickly production can respond in the near term. However, these one-time increases in prices are likely to have only transient effects on inflation. The median inflation projection of FOMC participants is 2.4% this year and declines to 2% next year before moving back up by the end of 2023. The Fed's response to this crisis has been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. As we say in our statement on longer-run goals and monetary policy strategy, we view maximum employment as a broad-based and inclusive goal. Our ability to achieve maximum employment in the years ahead depends importantly on having longer-term inflation expectations well anchored at 2%. As the committee reiterated in today's policy statement, with inflation running persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time and longer-term inflation expectations remain well anchored at 2%. We expect to maintain an accommodative stance of monetary policy until these employment and inflation outcomes are achieved. With regard to interest rates, we continue to expect it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. I would note that a transitory rise in inflation above 2%, as seems likely to occur this year, would not meet this standard. In addition, we will continue to increase our holdings of Treasury securities by at least $80 billion per month and of agency mortgage-backed securities by at least $40 billion per month until substantial further progress has been made toward our maximum employment and price stability goals. The increase in our balance sheet since last March has materially eased financial conditions and is providing substantial support to the economy. The economy is a long way from our employment and inflation goals, and it is likely to take some time for substantial further progress to be achieved. Our forward guidance for the federal funds rate, along with our balance sheet guidance, will ensure that the stance of monetary policy remains highly accommodative as the recovery progresses. Our guidance is outcome-based and ties the path of the federal funds rate and the balance sheet to progress toward reaching our employment and inflation goals. Overall, our interest rate and balance sheet tools are providing powerful support to the economy and will continue to do so. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We are committed to using our full range of tools to support the economy and to help assure that the recovery from this difficult period will be as robust as possible. Thank you. I look forward to your questions.
Thank you.
Howard from Reuters.
Hi, Chair Powell, and thanks for that. So could you talk us through how the forecasts for 2021 map into the substantial further progress definition?
No.
2.4% inflation. I understand that's considered transitory. That still seems like some progress there. 4.5% unemployment. Is it time to start talking about tapering yet?
Not yet. As you pointed out, we've said that we would continue asset purchases at this pace until we see substantial further progress, and that's actual progress, not forecast progress. And that's a difference from our past approach. And what we mean by that is pretty straightforward. It is we'll want to see that the labor markets have moved, labor market conditions have moved, have made substantial progress toward maximum employment, and inflation has made substantial progress toward the 2% goal. That's what we're going to want to see. Now, that obviously includes an element of judgment. And when we see, we'll be carefully looking ahead. We also understand that we will want to provide as much advance notice of any potential taper as possible. So when we see that we're on track, when we see actual data coming in that suggests that we're on track to perhaps achieve substantial further progress, then we'll say so. And we'll say so well in advance of any decision to actually taper.
If I could follow up on that, the shift in the dots, why wouldn't that suggest a weakening of the commitment here? An awful lot of people shifted into 2022, it seems.
I don't see that at all. You know, we have a range of perspectives on the committee. I welcome that, and you know, we debate things, we discuss things, and we always come together around a solution. But you know, the strong bulk of the committee is not showing a rate increase during this forecast period. And you know, as data improve, as the outlook improves very significantly since the December meeting, you would expect forecasts to move up. It's probably not a surprise that some people would bring in their estimate of the appropriate time for liftoff. Nonetheless, you know, the bulk of the committee, the largest part by far of the committee, doesn't show a rate increase during this period. And again, part of that is wanting to see actual data. Rather than just a forecast at this point. We do expect that we'll begin to make faster progress on both spending, you know, labor markets and inflation as the year goes on because of the progress with the vaccines, because of the fiscal support that we're getting. We expect that to happen, but, you know, we'll have to see it first.
Great, thank you. Victoria.
Hi, Chair Powell. I wanted to ask about the supplementary leverage ratio. You know, there's been a lot of talk about what you all are going to do this month, which I'm happy to hear an update if you have one. But just sort of more broadly, do you think long term that the leverage ratio poses problems for implementing monetary policy at a time when the reserve supply is going to remain large? And if so, do you think that changes to the leverage ratio, including the SLR, are the way to deal with that problem?
Victoria, we'll have something to announce on that in coming days, and I'm not going to expound upon your questions. Why don't you ask another question if you'd like to, because that one I'm just going to say that we're something in coming days.
Sure. Okay. Well, then I'll ask about unemployment. You know, there's the unemployment rate is you all have projections for the U6 rate, but you've also been, you know, really emphasizing the fact that that's not the only thing that you all are looking at. You're also looking at labor force participation and things like that. So are you all looking at ways of maybe adding to how you're projecting the unemployment rate to the summary of economic projections?
Well, let me say, as we say in our statement on longer run goals and monetary policy strategy, we look to a range of indicators on labor market. We never only looked at the unemployment rate, which is the only indicator of labor market outcomes that's in the SEP. We look at a very broad range. You hear us talk all the time about participation, about employment to population, which is the combination of the two, about different measures of unemployment. So it's wages, it's the job flows, it's, you know, all of those things they go into an assessment, disparities of various groups. All that goes into an assessment of maximum employment. The trying to incorporate all of that into the summary of economic projections would not be practical. You know, obviously the thing that we do include is just the unemployment rate, and that's a very insufficient statistic. So it doesn't include a lot of other things that we do look at. And I wouldn't want to say that we're looking to include the other dozen things that we look at into the SEP, but from time to time we do look at adding different things. But I would just say the SEP it's a summary. It's one device. It's not going to include all of the things that we look at. I think you know the things that we look at. We talk about them all the time. So we're not actually looking actively at significantly broadening those indicators in the SEP right now.
Thank you. Chris Rugaber, Associated Press.
Thank you. Chair Powell, I wanted to ask about the forecast overall. You're forecasting a very low unemployment rate next year, and in 2023, you have inflation, or the Fed overall is in the SEP forecasting inflation at or above 2% by 2023. yet no rate hike is forecast horizon. So is this telling us that you see a higher inflation rate than what's projected, or do you not, as you've been talking about, is the unemployment rate insufficient, or what is this telling us about the Fed's reaction function, that it seems you're meeting the Fed's dual mandate by 2023, yet again, no rate hike expected?
Then there's something wrong with you. You're certainly not
So
very good.
I guess the first thing to say is that the SEP is not a committee forecast. It's not something we sit around and debate and discuss and approve and say this represents our, our reaction function as a committee. It's a compilation of projections from different people, and but since we don't debate it or discuss it, it would be hard for me to say exactly why each participant did what they were going to do. So all I would say about this is that we've laid out what I think is very clear guidance on liftoff. And it's really three things: labor market conditions that are consistent with our estimates of maximum employment. And as I mentioned, we consider a wide range of indicators in assessing labor market conditions, not just the unemployment rate. Inflation that has reached 2% and not just on a transitory basis. And inflation that's on track to run moderately above 2% for some time. The first two of those three are very much data-based. The third does have a little bit of an element of expectations in it. So we are very much determined to implement this guidance in a robust way. It is the guidance that we chose carefully to implement our new framework. And to meet these standards, we'll need to see data, as I mentioned. So what does this SEP really say? It says that we're committed to our framework and to the guidance we've provided to implement that framework. We will wait until the requirements set forth in that guidance are clearly met before considering a change in our policy rate. And the last thing I'll say is this. The state of the economy in 2 or 3 years is highly uncertain, and I wouldn't want to focus too much on the exact timing of a potential rate increase that far into the future. So that's how I would think about the SEP.
Thank you. Paul Kiernan.
Thank you, Chairman Powell. My question is twofold. One, how high are you comfortable letting inflation rise? There is some ambiguity in your new target, as you mentioned, expectations driven. And do you think that ambiguity might cause markets to price in a lower tolerance for inflation than the Fed actually has, thereby causing financial conditions to tighten prematurely? Is that a concern? Thanks.
So we've said we'd like to see inflation run moderately above 2% for some time. And we've resisted, basically, generally, the temptation to try to quantify that. Part of that just is talking about inflation is one thing. Actually having inflation run above 2% is the real thing. So over the years, we've talked about 2% inflation as a goal, but we haven't achieved it. So I would say we'd like to, perform. That's what we'd really like to do, is to get inflation moderately above 2%. I don't want to be too specific about what that means because I think it's hard to do that. And we haven't done it yet. When we're actually above 2%, we can do that. Look, I would say this. The fundamental change in our framework is that we're not going to act preemptively based on forecasts for the most part. And we're going to wait to see actual data. And I think it will take people time to adjust to that and to adjust to that new practice. And the only way we can really build the credibility of that is by doing it. So that's how I would think about that.
Thank you. Matthew Boesler.
Hi, Chair Powell. This is Matthew Boesler with Bloomberg News. So there's a widespread presumption at this point that the U.S. will reach herd immunity sometime this year. And all along, you've said that the path of the economy is going to be determined by the course of the virus.
Look at this guy.
I'm curious, based on the projections that you released today that show unemployment will still be above estimates of maximum employment through the end of next year and perhaps sometime into 2023, do you think policymakers need to be doing more here to sort of align the herd immunity and full employment timelines, if you will? Thank you.
So on herd immunity, I'm really going to leave that question to the experts.
I don't think it's going to happen.
We don't control that. We're not responsible for defining it.
Takes many people in this case to
we'll leave
tango.
that whole discussion to the experts. I mean, what we're focused on is the part that we control, which is the support that we provide to the economy. And there we provided very clear guidance. And in the case of asset purchases, it's at their current level until we make substantial further progress. There is an element of judgment in that, and we'll supply clear communication well in advance of actually tapering. And we just went through the criteria for raising interest rates. They're very specific, and we're very much committed to having them fulfilled robustly. I would agree with you that the path of the virus continues to be very important. We have these new strains which can be quite virulent, and we're not actually done yet. And we're clearly on a good path with cases coming down, as I mentioned, but we're not done. And I'd hate to see us take our eye off the ball before we actually finish the job. So that's how I would look at that.
If I could just briefly follow up, how do you see sort of the disconnect in terms of an economy that is expected to be widely reopened this year, but full employment taking longer to achieve? Is it the case that factors related to the virus will still be with us over the coming years? Is that how to interpret the forecasts?
I think there's some of that. Sure, there'll be some of that. There'll still be some social distancing. People may be, for example, going into spaces that involve close contact with others. Some people will do that right away. Others will hold back, and so I think there'll be some of that. In addition, though, remember there are 10 million people in the range of 10 million people who need to get back to work, and it's going to take some time for that to happen. It can happen. Maybe more quickly than it has in the past because
it can happen.
It involves the reopening of a sector of the economy as opposed to stimulating aggregate demand and waiting for that to produce job demand for workers. This could be a different sort of a process, and it could be quicker. We don't know that. But it's just a lot of people who need to get back to work, and it's not going to happen overnight. It's going to take some time, no matter how well the economy performs. Unemployment will take quite a time to go down, and so will participation. So that's all I can say. I think the faster the better. We'd love to see it come sooner rather than later. We'd welcome nothing more than that. But realistically, given the numbers, it's going to take some time.
Thank you. Steve Leisman.
Mr. Chairman, thank you.
Look at this guy.
I wonder if you could, kind of a three-parter here.
You're not a nice
related.
person.
Would you comment on the current level of the 10-year yield and some other long rates out there, whether or not you think they would have a negative effect on the economy? And if not, is there a level that would give you concern? And finally, the third part, other central bankers have expressed concern about what's happened to yields in their countries, and even some taken action, but not you. Could you give us your general idea or orientation towards the idea of coming into the market and affecting a particular tenor of the bond market? Do you like that idea? Do you like it at the top of your toolbox, or is it something that you think is at the bottom of the toolbox?
Sure. So we monitor a broad range of financial conditions, and we're always attentive to market developments, of course. We're still a long way from our goals, and it's important that financial conditions do remain accommodative to support the achievement of those goals. And if you look at various indexes of financial conditions, what you'll see is that they generally do show financial conditions overall to be highly accommodative, and that is appropriate. So that's how we look at it. I would add, as I've said, I would be concerned by disorderly conditions in markets or by a persistent tightening of financial conditions that threaten the achievement of our goals. We think the stance of monetary policy remains appropriate. Our guidance on the federal funds rate and on asset purchases is providing strong support for the economy, and we're committed to maintaining that patiently accommodative stance until the job is well and truly done.
Could you give us an idea of how you sort of feel about that tool of being able to come into a particular part of the market and either doing an operation twist or something like that? Is that something you feel to be the top of your toolbox, or something that you don't really prefer?
You know, the tools we have are the tools we have. What I'm telling you is that the stance of monetary policy we have today, we believe is appropriate. We think that our asset purchases in their current form, which is to say, you know, across the curve, 80 billion in treasuries, 40 billion in mortgage-backed securities on net, we think that that's the right place for our asset purchases. Now, we can change them, of course, in a number of different dimensions, should we deem that that's appropriate. But for now, we think that our policy stance on that is appropriate.
Thank you. Rachel Siegel.
Hi, Chair Powell. Thanks very much for taking my question. You've spoken about the pandemic's disproportionate toll on Black Americans, Hispanic Americans, Asian Americans, and other groups in the labor market. And I'm curious if you can speak to specific indicators that the Fed will be using to measure job gains for groups that have persistently higher rates of unemployment compared to white Americans. And relatedly, since you've described vaccines as key to the economic recovery, is the Fed concerned about lower vaccination rates in communities of color, and what barriers do you think exist there? Thanks very much.
So which measures? So we do monitor and communicate very regularly about
drugs,
different labor market disparities in the labor market, let's say. So the African American unemployment rate is substantially elevated, and so is the Hispanic unemployment rate. So we look at those and we see those as, you know, it's slack in the labor market. It's sad to see because those disparities had really come down to record lows since we started keeping the data that way. As recently as a year ago, February of last year, we had those disparities quite low. What happens in a downturn, though, is they move up at twice the speed of white unemployment. So we monitor those things. Our tools, of course, affect unemployment generally, but we're going to look at those as a form of slack in the labor market and hope that that there's progress there. And this particular downturn, of course, was just a direct hit on a part of the economy that employs many minorities and lower paid workers. The public-facing workers in the service industries, in many cases, don't have a lot of financial assets. They're not tremendously well paid. They might have other jobs and things like that. So this was a direct hit on that part of the economy, and it's the slowest part of the economy to recover. So, we like to see those people continue to get supported, as the broader economy recovers, which is very much doing now. In terms of disparate levels of vaccination, those are facts, unfortunate facts. They're really not something we have within our policy toolkit to address, but it is true, though, that the data we have suggests that there are significant disparities between different ethnic groups, and but that's not for us. That's for fiscal authorities and the government more generally to work on.
Thank you. Gina Smialek.
Hey, Chair Powell. Thanks for taking our questions. I was wondering if you could talk a little bit about how you see the fiscal policy support that has come down the line affecting the economy's potential in the longer term, just in the sense that you've talked a lot about the potential for labor market scarring and how that might weigh on our sort of future prospects. And I wonder whether you see that sort of working in reverse. If we pull people back into the labor market more quickly, does that improve our chances?
So I do think that fiscal policy overall will have really helped us to avoid much of the scarring that we were very, very concerned about at the beginning. And I think that's just the size and the speed with which Congress has delivered, with the CARES Act and since then, is going to wind up very much accelerating the return to full employment. It's going to make a huge difference in people's lives, and it has already. As I mentioned in my opening remarks, the recovery has been faster than we expected. Part of that just is very hard to predict, given we've never seen an event like this. But part of it is just the strength of the fiscal response, which I think will look good over the years. Longer term, to really, the first part of it is about avoiding scarring, and I think we've not avoided all of the scarring, but we've probably avoided the worst cases there. And I hope we keep at it, and we will keep at it with our policies, of course, to do whatever we can to make sure that continues. Longer term, though, what it takes to drive productive capacity per capita or per hour worked to raise living standards over time is investment in people's skills and aptitudes, investment in plant and equipment, investment in software. It takes a lot of investment to support a more productive economy and raise living standards. And that's, that hasn't been the principal focus with these measures, our measures certainly, and we don't have those tools. But what Congress has been doing has mainly been replacing lost income and beginning to, support people as the economy returns to normal. But there should be a focus on, a longer term focus, I think, would be healthy on the investment front.
Thank you. James Politi.
Thank you, Chair Powell.
Thank you.
I wanted to ask a question about the Eurozone. While the outlook for the U.S. economy has much improved, progress in the Eurozone has been far less encouraging, and it's showing signs of serious weakness due to the slower vaccination rollout and renewed lockdowns and restrictions. How worried are you about transatlantic economic divergence and the possibility that that trouble in the Eurozone and weakness in the Eurozone could drag down the U.S. recovery as it did in a way in the aftermath of the financial crisis?
You're the most amazing
You're right.
guy.
The pace of the recovery is, we're having diverging recoveries here, as we did after the last crisis. And in this case, as well as the other one, the U.S.'s recovery is leading the global recovery. And we conduct policy, of course, here. Our focus is on our objectives are domestic ones. It's maximum employment and price stability here in the United States. We monitor developments abroad, and we know that because we know that those can affect our outcomes.
China.
So I think U.S. demand, very strong U.S. Demand, if as the economy improves, is going to support global activity as well over time. That'll be through imports, and when the U.S. economy is strong, that strength tends to support global activity as well. So that's one thing. I don't worry in the near term. I'd love to see Europe growing faster. I'd love to see the vaccine rollout going more smoothly. But I don't worry too much about us in the near term because we're on a very good track. Very strong fiscal support coming. Now vaccination going quickly, and cases coming down. I think we're in a good place. It's all ahead of us, but the data should get stronger fairly quickly here and remain strong for some time here.
Thank you. Hannah Lang.
Hi, thanks so much for taking our questions. I wanted to ask if the Fed is planning on extending the same restrictions on bank dividends and share repurchases that are currently in place into the second quarter, and if you're considering at all the scenario analysis and mid-cycle stress tests that were in place last year, this year, and kind of what would make you consider doing something like that again.
So we haven't made a decision on that. We're a couple weeks away from announcing that decision. I won't foreshadow it here today.
We don't know what's happening.
I will say we're going to continue our data-driven approach. You know that we restricted buybacks and dividends, so the firms are preserving capital. Through 2020, the banks actually increased their level of capital and their level of reserves. And the December stress tests showed that banks are strong and well capitalized under our hypothetical recessions that we used in December, which were quite stringent. We're right in the middle of our 2021 stress test, and we'll release those results before the end of June.
2017.
And that layers, very significant additional stress on top of the stress the banks have already absorbed over the past year, with the unemployment rate going to 11% and stock prices falling more than 50%. So. But all of that, the results of the stress test and the decision on distributions, all of that is to come fairly soon, as I mentioned.
Thank you. Edward Lawrence.
Thanks, Chair Powell, for taking these questions. You laid out the standards to lift off, and back in June of 2020, you said you're not even thinking about raising rates. But I see 7 members seeing liftoff in 2023 and 4 next year. How much debate and how can you characterize that conversation has there been about moving off the lower bound earlier than signaled?
Well, it all depends. We've set out very clear criteria for liftoff, right? Where we've said we want to see labor market conditions that are consistent with our estimates of maximum employment. And that doesn't just mean unemployment, it means a much broader set of criteria. We want inflation at 2% and not on a transitory basis, and we want inflation on track to run moderately above 2% for some. Those are the 3 conditions. Everybody on the committee agrees to that, right? So it comes down to what's your projection for the economy. If you want to, people will have a range of assessments for how good the economy is going to be, and we don't. I would say that we're in a relatively highly uncertain situation. If you look at the uncertainty, people on the committee broadly say that uncertainty about the forecast is very high compared to the normal level. We haven't come out of a pandemic before. We haven't had this kind of fiscal support before, totaling it all up. So you're going to have different perspectives from committee participants about how fast growth will be, how fast the labor market will heal, how fast inflation will move up, and those things are going to dictate where people write down an estimate of liftoff. Of course, this isn't a decision to lift off now. We make that decision then, but it's an estimate based on assumptions about growth, and it's meant to be a tool to generally show the public how our objective function works, how we think about the future. It isn't meant to actually pin down a time when we might or might not lift off. We're not going to make that decision for some time. The chances are that the economy in that time and place will be very different from the one we think it'll be. So I sometimes with the dots, I have to be sure to point out that they're not a committee forecast. You know this, but they're not a committee forecast. It's just compiling these projections, really, of individual people. We think it serves a useful purpose. It's not meant to actually be a promise or even a prediction of when the committee will act. That will be very much dependent on economic outcomes, which are highly uncertain.
Thank you. We'll go to Brian Chung.
Thank you.
Under Chairman Powell, I wanted to elaborate a little bit on your commentary about the fiscal stimulus. So it sounds like you, I guess, see the case for even maybe more investment, at least from Congress, to support the more productive economy, as you answered to Gina's question. So we just had $1.9 trillion in spending. So where do you see the fiscal space right now? Do you still, I guess, maybe see the country in a place right now where it wouldn't be a concern if there were to be more spending at this time?
No, so Brian, it's not up to us to decide what Congress should spend money on or when. I was answering Gina's question, which really was, how do we assure lack of damage to scarring, for example, or lack of damage to the productive capacity of the economy? And I think what's happened so far has done a pretty good job of that. But really, I wanted to make the longer run point that to work on productivity over longer periods, that comes down to a number of things, but one of those things is investment in people, in their skills, education, aptitude, all of those things. I'm not in any way suggesting that that's something Congress should work on right now, or that that's just not that's not our job. I'm just saying that is what fiscal policy can do. That really monetary policy can't do is invest in the future productive capacity of the economy, raise potential growth. Those things are completely tools that Congress has. And again, I wasn't making a comment at all on the current fiscal setting.
Thank you.
Thank you. Next to Michael Derby.
Great. Thank you for taking my question. I just wanted to get an updated view on your sense of your view on financial stability risks and whether or not you see any pockets of excess out in financial markets that concern you, either specifically to that area of the market or as in terms of like the threat that it could propose to the overall economy. Sure.
So, as you know, financial stability for us is is a framework. It's not one thing. It's not a particular market or a particular asset or anything like that. It's a framework that we have. We report on it semi-annually. The board gets a report on it quarterly, and we monitor every day. And it has 4 pillars, and those are 4 key vulnerabilities: asset valuations, debt owed by businesses and households, funding risk, and leverage among financial institutions. Those 4 things, and I'll just quickly touch on them. So if you look at asset valuations, you can say that by some measures, some asset valuations are elevated compared to history. I think that's clear. In terms of households and businesses, households entered the crisis in very good shape by historical standards. Leverage in the household sector had been just kind of gradually moving down and down and down since the financial crisis. Now there was some negative effects on that. People lost their jobs and that sort of thing, but they've also gotten a lot of support now. So
we will make
the damage
America
hasn't been as bad as we
again.
thought. Businesses, by the same token, had a high debt load coming in, and many saw their revenues decline. But they've done so much financing, and there's a lot of cash on their balance sheets. So nothing in those 2 sectors really jumps out as really troubling. Short-term, I mentioned funding risk as the last one. So we saw again in this crisis breakdowns in parts of the short-term funding markets. Came under a tremendous amount of stress, and they've been quiet since the spring. And we shut down our facilities and all that. But we don't feel like we can let the moment pass without just saying again that some aspects of the short-term funding markets and more broadly non-bank financial intermediation didn't hold up so well under great stress, under tremendous stress, and we need to go back and look at that. So a very high priority for us as regulators and supervisors is going to be to go back, and this will involve all the other regulatory agencies. It does involve all of them as well, and see if we can strengthen those things. So that's a sort of a broader, detailed look.
Thank you. Michael McKee.
Mr. Chairman, can you help me understand something about the SEP and your forecasts? The inflation that you're talking about for this year, say, is transitory. Then by 2023, you're back down to 2.1%. There's no forecast for a rate increase for 2023. If you get to 3.5% unemployment, but inflation's only at 2 or 2.1%, are you willing to leave rates at 0 going forward from there, or roughly 0 going forward from there? In other words, could we be in a Japan-like situation where rates just stay low because inflation does?
Well, again, I wouldn't read too much into the March 2021 SEP. Dot plot. Remember what it is. It's a compilation of individual projections by individual members. They're all making different assessments. They have different forecasts, economic forecasts. Some have more optimistic ones, some less optimistic. And also remember that the SEP doesn't actually include all the things that go into maximum employment, right? It only includes unemployment. So. I would just say we've set out clear guidance. The message from the SEP that I would like to leave with people is we set out clear guidance. I mentioned what it was. It's inflation it's labor market conditions consistent with our estimates of maximum employment. And that's not just unemployment, it's all the other indicators. But overall totaling up to maximum employment. It's inflation at 2% and not on a transient basis, and inflation on track to exceed 2% for moderately for some time. Those are the criteria. We're committed to robustly implementing that guidance, and that's what this says. That's really all it says. We're going to wait until those requirements are met. And again, the state of the economy in 2 or 3 years is highly uncertain, and I wouldn't want to focus too much on the exact timing of a potential rate increase that far into the future.
If I could follow up, I'm just wondering, before 2019, shall we say, you were focused on the problems with having interest rates too low. Now, are you saying we're willing to live with it until we reach these goals, even if you reach your goal on maximum employment?
So what I would say is we're committed to giving the economy the support that it needs to return as quickly as possible to a state of maximum employment and price stability. And, to the extent having rates low and support for monetary policy broadly, to the extent that raises other questions, we think it's absolutely essential to maintain the strength and stability of the broader financial system, and to carefully monitor financial stability questions, if that's what you're getting at. We do that. We monitor them very carefully. I would point out that over the long expansion, longest in U.S. history, 10 years and 8 months, rates were very low they were at zero for 7 years, and then never got above 2.4% roughly. During that, we didn't see actually excess buildup of debt. We didn't see asset prices form into bubbles that would threaten the progress of the economy. We didn't see we didn't see a housing bubble. The things that have tended to really hurt an economy and have in recent history hurt the U.S. We didn't see them build up despite very low rates. Part of that just is that you're in a low rate environment. You're in a much lower rate environment, and the connection between low rates and the kind of financial instability issues is just not as tight as people think it is. That's not to say we ignore it. We don't ignore it. We watch it very carefully, and we think there is a connection. I would say there is, but it's not quite so clear. We actually monitor financial conditions very, very broadly and carefully, and we didn't do that before the global financial crisis 12 years ago. Now we do. And we've also, put a lot of time and effort into strengthening the large financial institutions that form the core of our financial system are much stronger, much more resilient. That's true of the banks. I think it's true of the CCPs. We want it to be true of other non-bank financial intermediation markets and institutions. So I think that's monetary policy should be, to me, provide for achieving our macroeconomic aims. Financial regulatory policy and supervision should be for strengthening the financial system so that it is strong and robust and can withstand the kinds of things that it couldn't, frankly. And we learned that in 2008, 9, 10. This time around, the regulated part of the financial system held up very well. We found some other areas that need strengthening, and that's what we're working on now.
Thank you. Anakin, CNN.
Thanks for taking my question. Chairman Powell, could you talk to us a little bit about the relationship between the persistent pandemic unemployment and the expected increase in inflation? Does the former offset the latter to some degree?
I'm sorry, could you repeat that? You broke up there for a second.
Oh, no. I was hoping that wouldn't happen. Can you hear me now?
Yes, yeah.
Okay, great. I was asking if you could talk to us a little bit about the relationship between the persistent pandemic unemployment and the expected increase in inflation. I'm wondering whether the former offsets the latter and to which degree you guys are monitoring this.
You're asking about the relationship between unemployment and inflation? Is that the question?
Yes, exactly.
Okay.
They offset each other, the persistent pandemic unemployment.
Yeah, I think I'm hearing you correctly. So I would say a couple things. There was a time when there was a tight connection between unemployment and inflation. That time is long gone. We had extremely low unemployment, not extremely low. We had low unemployment in 2018 and 19 and the beginning of 20 without having troubling inflation at all. We were at 3.5%. We were bouncing around with unemployment 3.5% to 4%. And it wasn't just unemployment. Participation was high. Wages were moving up. It was a very healthy thing. And we didn't see price inflation move up. There is a relationship between wage inflation and unemployment. But that has not, what happens is that when wages move up because unemployment is low, companies have been absorbing that increase into their margins rather than raising prices. And that seems to be a feature of late cycle behavior. So we're not when we seek to achieve low unemployment, high levels of employment, which is our mandate, we think we have the freedom to do that based on the data without worrying too much about inflation.
Thank you. Going to Greg Robb.
Hi, thanks for taking my question. I wanted to follow up a little bit. I understand what you're saying about the dot plot and the message you're trying to send with the dot plot, but does the same apply for the taper tantrum? You've said that it's going to take some time to get some fundamental progress on your goals, but it seems like some time could now be any time.
Well, so we've said substantial further progress. Now, if you go back November, December, and January, progress in the labor market slowed very sharply. So you had an average of 29,000 jobs per month. If you go back and look at the level of job creation before that was very, very high, very high. So we weren't making any progress on the labor market from November through January. February, we saw a nice pickup, a good jobs report, 379,465 private sector. So that's good. It can go so much higher, though, and it would be nice to see to really make faster progress. That's different from substantial progress. We'd like to see it be higher than that, and I think it will be. That's the expectation. Is you'll see now, I think, really strong job creation return. Not as high as it was in the very early days of the recovery, the reopening of the economy, but nonetheless very strong. Okay, so what I'm saying is, to achieve substantial progress from where we are, having had 3 months of very little progress, it's going to take some time. And we don't want to get into, I don't want to get into trying to put a pin on the calendar someplace, because it's going to be data dependent. When we see ourselves on track to make substantial further progress, we're going to say so. We understand fully that test is one that involves judgment. If you remember, during the global financial crisis recovery, we said quantitative easing number 3 was, the test was a substantial improvement in the outlook for the labor market. Well, what does that mean? Well, it means a substantial improvement in the outlook for the labor market. It meant we would communicate when we thought we had that. This is just like that, in a way. What we're saying is substantial further progress toward our goals. We'll tell people when we think, until we give us a signal, you can assume we're not there yet. And as we approach it, well in advance, we will give a signal that yes, we're on a path to possibly achieve that, to consider tapering. So that's how we're planning to handle it. It's not different really from QE3. And I think what we've learned from the experience of these last dozen years is to communicate very carefully, very clearly, well in advance, and then follow through with your communications. In this case, it's an outcome-based set of guidance, as our rate guidance is, and it's going to depend on the progress of the economy. That's why it's not appropriate to start pointing at dates yet.
Thank you.
Thank you. Don Lee, LA Times.
Hi, Chair Powell. As you know, households are sitting on a lot of excess savings, and I wonder if, combined with that, you have an unleashing of, pent-up demand. How much do you think that would affect inflation, and would you expect that to be transitory?
And everyone who's forecasting these, what we're all doing is we are looking at the amount of savings. We're looking at, we have reasonably good data on that, and we're looking at the government transfers that'll be made as part of the various laws, and we're trying to make an assessment on what will be the tendency of people to spend that money, the marginal propensity to consume. And from that, you can develop an estimate of the impact on spending, on growth, on hiring, and ultimately on inflation. So that's what we're all doing. And we have, we can look at history and we can make estimates, and those are all very transparent and public, and you can compare one to the other. And of course, we've all done that. And I think we've made very conservative assumptions and sensible mainstream assumptions at each step of that process. And what it comes down to is what I said before, which is there very likely will be a step up in inflation as March and April of last year drop out of the 12-month window because they were very low inflation numbers. That'll be a fairly significant pop in inflation. It'll wear off quickly, though, because just the way the numbers are calculated. Past that, as the economy reopens, people will start spending more, and that you can only go out to dinner once per night, but a lot of people can go out to dinner, and so. And they're not doing that now. They're not going to restaurants, not going to theaters. That part of the economy, and travel and hotels, that part of the economy is really not functioning at full capacity. But as that happens, people can start to spend. It's also wouldn't be surprising if, and you're seeing this now, particularly in the goods economy, there'll be bottlenecks. They won't be able to service all of the demand maybe for a period. So those things could lead to, and we've modeled that. Other people have too. And what we see is relatively modest increases in inflation. So, but those are not permanent things. What'll happen is the supply side. The supply side in the United States is very dynamic. People start businesses. They reopen restaurants. The airlines will be flying again. All of those things will happen. And so it'll turn out to be a one-time sort of bulge in prices, but it won't change inflation going forward because inflation expectations are strongly anchored around 2%. We know that inflation dynamics do evolve over time. There was a time when inflation went up, it would stay up, and that time is not now. That hasn't been the case for some decades. And we think we won't suddenly change to another regime. These things tend to change over time, and they tend to change when the central bank doesn't understand that having inflation expectations anchored at 2% is the key to it all. Having them anchored at 2% is what gives us the ability to push hard when the economy is really weak. If we saw inflation expectations moving materially above 2%, of course, we would conduct policy in a way that would make sure that didn't happen. We're committed to having inflation expectations anchored at 2%, not materially above or below 2%. So that's, I think if you look at the savings, look at all of that, model it, that's kind of what comes out of our assessment. There are different possibilities. I think it's a relatively unusual, very unusual situation to have all these savings and this amount of fiscal support and monetary policy support. Nonetheless, that is our most likely case. And as the data come in and the economy performs, we'll of course adjust. Our outcome-based guidance will immediately adapt, we think, to meet whatever the actual path of the economy is.
Thank you. We'll go to Scott Horsley for the last question.
Thanks, Chairman Powell. My question is about those supply chain bottlenecks, especially on the goods side. Are they getting better or are they getting worse? We saw they were sort of a drag on the industrial production numbers that came out yesterday. And what do you expect them to do to prices just in the short run?
I think it's impossible to say, frankly, with any confidence, but I would expect, it's very possible, let's put it that way, that you will see bottlenecks emerge and then clear over time, and you'll probably see that over a period of time because, really the strong data are ahead of us. Right now that the checks are going out just now, and that'll add to spending. COVID cases are coming down. Vaccination is moving now quickly. The really strong economic data is coming. It should be coming, assuming we stay on this track. And that's when you'll really know where the bottlenecks are. But you can see, though, that these are not permanent. It's not like the supply side will be unable to adapt to these things. The market will clear. It just may take some time. And some of the answer to that may be price. In many cases, it won't be price. You'll see that people are reluctant to raise prices. It's a little bit the story about, the wage Phillips curve does show that as unemployment goes down, wages move up. But companies choose not to try to pass that price increase along to their customers. So you'll see a lot of that here, too, I think. Anyway, we'll see, but that's my basic sense. Thank you very much.
Thank you.
Good afternoon. At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Since the beginning of the pandemic, we have taken forceful actions to provide relief and stability, to ensure that the recovery will be as strong as possible, and to limit lasting damage to the economy. Today, my colleagues on the FOMC and I kept interest rates near zero and maintained our sizable asset purchases. These measures, along with our strong guidance on interest rates and our balance sheet, will ensure that monetary policy will continue to deliver powerful support to the economy until the recovery is complete. The path of the economy continues to depend significantly on the course of the virus. A resurgence in recent months in COVID-19 cases, hospitalizations, and deaths is causing great hardship for millions of Americans and is weighing on economic activity and job creation. Following a sharp rebound in economic activity last summer, the pace of the recovery has moderated in recent months, with the weakness concentrated in the sectors of the economy most adversely affected by the resurgence of the virus and by greater social distancing. Household spending on services remains low, especially in sectors that typically require people to gather closely, including travel and hospitality. And household spending on goods has moderated, following earlier large gains. In contrast, the housing sector has more than fully recovered from the downturn, supported in part by low mortgage interest rates. Business investment and manufacturing production have also picked up. The overall recovery in economic activity since last spring is due in part to federal stimulus payments and expanded unemployment benefits, which have provided essential support to many families and individuals. The recently enacted Coronavirus Response and Relief Act will provide additional support. Overall, economic activity remains below its level before the pandemic, and the path ahead remains highly uncertain. As with overall economic activity, the pace of improvement in the labor market has slowed in recent months. Employment fell by 140,000 in December, as continued gains in many industries were outweighed by significant losses in industries where the resurgence of the virus has weighed further on activity. In particular, the leisure and hospitality sector lost nearly 500,000 jobs, largely from restaurants and bars. The unemployment rate remained elevated at 6.7% in December, and participation in the labor market is notably below pre-pandemic levels. Although there has been much progress in the labor market since the spring, millions of Americans remain out of work. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been the hardest hit. In particular, the high level of joblessness has been especially severe for lower wage workers in the service sector and for African Americans and Hispanics. The economic dislocation has upended many lives and created great uncertainty about the future. The pandemic has also left a significant imprint on inflation. Following large declines in the spring, consumer prices picked up over the summer, but have leveled out more recently. For those sectors that have been most adversely affected by the pandemic, prices remain particularly soft. Overall, on a 12-month basis, inflation remains below our 2% longer-run objective. While we should not underestimate the challenges we currently face, several developments point to an improved outlook for later this year. Sufficiently widespread vaccinations would enable us to put the pandemic behind us and return to more normal economic activities. In the meantime, continued observance of social distancing measures and wearing masks will help us reach that goal as soon as possible. Support from fiscal policy will help households and businesses weather the downturn, as well as limit lasting damage to the economy that could otherwise impede the recovery. In addition, as we have seen since last summer, the economy has proved more resilient than expected, in part reflecting the adaptability of households and businesses. Finally, monetary policy is playing a key role in supporting the recovery and will continue to do so. The Fed's response to this crisis has been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. Today, we unanimously reaffirmed our statement on longer-run goals and monetary policy strategy, as we typically do each January. As we say in that statement, we view maximum employment as a broad-based and inclusive goal. Our ability to achieve maximum employment in the years ahead depends importantly on having longer-term inflation expectations well anchored at 2%. As the committee reiterated in today's policy statement, with inflation running persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time and longer-term inflation expectations remain well anchored at 2%. We expect to maintain an accommodative stance of monetary policy until these employment and inflation outcomes are achieved. With regard to interest rates, we continue to expect it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. In addition, we will continue to increase our holdings of Treasury securities by at least $80 billion per month and of agency mortgage-backed securities by at least $40 billion per month until substantial further progress has been made toward our maximum employment and price stability goals. The increase in our balance sheet since last March has materially eased financial conditions and is providing substantial support to the economy. The economy is a long way from our employment and inflation goals, and it is likely to take some time for substantial further progress to be achieved. Our forward guidance for the federal funds rate, along with our balance sheet guidance, will ensure that the stance of monetary policy remains highly accommodative as the recovery progresses. Our guidance is outcome-based and ties the path of the federal funds rate and the balance sheet to progress toward reaching our employment and inflation goals. Thus, if progress toward our goals were to slow, the guidance would convey our intention to increase policy accommodation through a lower expected path of the federal funds rate and a higher expected path of the balance sheet. Overall, our interest rate and balance sheet tools are providing powerful support to the economy and will continue to do so. We've also taken actions to more directly support the flow of credit in the economy, deploying our emergency lending powers to an unprecedented extent, enabled in large part by financial backing and support from Congress and the Treasury. Although the CARES Act facilities are no longer open to new activity, our other facilities remain in place. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We are committed to using our full range of tools to support the economy and to help assure that the recovery from this difficult period will be as robust as possible. Thank you. I look forward to your questions.
Thank you, Gina Smialek. Hi, Chair Powell. Gina Smialek from the New York Times. Thank you for taking our questions. I was hoping that you would first react to the wild ride that GameStop stock has had this week. And then secondarily, you and your colleagues have repeatedly made it clear that you really plan to use macroprudential tools as a first line of defense when it comes to financial stability risks, but your macroprudential tools primarily apply to the banks. I'm wondering what your plan is if you see some sort of large financial stability risk emanating from the non-bank financial sector in the coming months, especially as it relates to search for yield kind of activities. What do you see as the solution there? Thanks.
So on your first question, I don't want to comment on a particular company or day's market activity or things like that. It's just not really something that I would typically comment on. In terms of macroprudential policy tools, so as you know, no doubt, we rely on sort of always on through the cycle macroprudential policy tools, particularly the stress tests and also the elevated levels of liquidity and capital and also resolution planning that we impose on the largest financial institutions. We don't use time varying tests and tools as some other countries do, and we think it's a good approach because for us to use ones that are always on, because we don't really think we'd be successful in every case in picking the exact right time to intervene in markets. So that's for banks. You really asked about non-banks, the non-bank sector. And so we monitor financial conditions very broadly. And while we don't have jurisdiction over many areas in the non-bank sector,
we really do have to get going.
You're fired.
Nope.